ठीक है, बटन नहीं था। Good afternoon, friends. Hope I'm audible. My audio and video, both it's perfect to all the participants. Can you say just yes in a chat box so that we get a clarity and we can start our webinar today on very important topic, GST latest jurisprudence. I will request participants to say yes in a chat box. Okay. Okay, all right. So my audio video is going perfectly fine. Thank you very much. Okay, all right, all right. So you can send your comment and question answers tab, Bhavna. So I can get an idea that audio video is going perfectly fine. All right. So without taking much time, now let me start with today. We are going to have this webinar, and this webinar is being designed in a very different way. We are going to discuss latest GST judgment and jurisprudence on different broad topic like supply, GST, input tax credit, valuation, place of supply, registration cancelled by the proper officer, refund, etc. So we got all learned speakers. They are going to make presentation. Today we are going to digest what all judgment are coming in. Whether these judgment are going to give clarity or creating more confusion is wait and watch. So I welcome each one of you who have joined as of now. So I will just start my presentation. I'm just taking few minutes more so that we can see maximum participation gets added. All right, thank you very much. Okay, let me start with. See, what I'm going to do in my theme presentation, I'm going to discuss 6 judgment on different topic to ignite your mind, to invite your attention. Yes, on topic specific judgment going to be deliberated by learned speakers after my theme presentation, but my objective is to ignite your mind and create your awareness, and just to give a flavor what kind of webinar we are going to have today. I'm sure you'd be liking all the judgment which is evolving after GST got introduced on July 1, 2017. Having said that, let me start with the very first topic, GST input tax credit. GST input tax credit is being stated as a soul of any taxation system. But in GST regime, we have seen, though it was stated that GST ITC going to be seamless flow of credit, but there are so many riders with a condition and restriction that it is not seamless flow of credit. And number of judgments started coming in, which is very much important for us to digest and then accordingly move forward. What should be our take on those judgments and what is way forward? We have to decide, and we have to make sure that we are complying with the provision so that we can safeguard ourselves from any unwanted, unwarranted implication, tax implication, along with interest and penalty. Having said that, let me start with the very first judgment. Let's say you all are my buyer. You all are my buyer, recipient, and I'm your supplier. I have supplied for 10 lakh rupees, Delhi to Maharashtra, interstate, IGST charged. You being buyer has paid the amount to me, to the supplier. And supplier did not deposit the tax with the government exchequer, even after collecting the tax. What happened? Credit is available or not available to you. This is what the condition, one of the condition under section 16, subsection 2. When I look at section 16, subsection 2, initially there were 4 conditions for availing credit. You as a buyer or recipient should have tax invoice copy. You must have received goods and services. Your supplier must have paid taxes. And last, initial, that you as a recipient regularly filing GST return under section 39, recipient. 5th condition got added from 1st January 2022 that credit availed by you, recipient, in 3B must be matched with GSTR 2B. And 6th condition got introduced from 1st October 2022 that whatever credit gets auto-populated in 2B, you must check that it is not restricted as per 6th restriction as specified under section 38. So this is a basic background given to you. Now, what practically we are finding very difficult today, that you as a genuine and honest buyer, recipient, has paid the amount to the supplier. Supplier, even after collecting the tax, is not depositing the tax. whether credit is available to you or not. This is the moot question which we need to see what judgment coming in and where we are heading for. Now, I will take you in the pre-GST regime where this matter was under central excise and corresponding credit that is sunwet. Honorable Supreme Court had said in KK Industries Limited that credit can't be denied for the buyer for the fault of supplier of non-payment of taxes. In VAT regime, maximum High Court judgment, including Delhi High Court judgment, arise in India. It is being stated that credit can't be denied for the buyer, recipient, for the fault of supplier of non-payment of taxes. Yes, Bombay High Court judgment, Mahakottan Lakshmi case is against. But in GST regime also we have seen one Madras High Court judgment, D.Y. Bethel Enterprises. And in that judgment, it was categorically held that credit can't be denied for the buyer. And department should not demand reversal of credit from the buyer, from the recipient, unless they take action, initiate action against the defaulting supplier. But very recently, Patna High Court, in the case of Astha Enterprises, has held that if your supplier has not deposited the tax, even after collecting the tax, your credit, buyer's credit, recipient credit going to be denied. And in this judgment, a lot of point is being discussed. They have seen the Madras High Court judgment, D.Y. Bethel Enterprises. They have given the importance of one of the Supreme Court judgment pertaining to Karnataka VAT, Ecom Kill Global Coffee Private Limited, where genuineness to be proven by the purchasing dealer. Just having tax invoice or a payment is made through banking transaction, you are not entitled. Recipient is not entitled. But now let's listen very carefully. If credit is being denied for the recipient, for the buyer, the problem would be you have paid the amount and credit is being denied. It's a double baby. Why? Department can't take action against the defaulting supplier. When registration is being given by same GST department to both supplier and recipient, why recipient need to reverse credit? But that is how. In case of Astha Enterprises, this was argued that department could have gone to defaulting supplier and they could have initiated recovery proceedings against defaulting supplier. Why they are coming back to recipient and demanding reversal? Honorable Patna High Court did not hear that. They said even though the provision exists, but it is one of the conditions under section 16, subsection 2, clause C, that unless paid by the supplier, purchasing dealer will not get the credit. Just because double baby, it is not the argument. Just because it can be collected from supplier, it cannot be argued. This is what the Astha Enterprises Patna High Court judgment. For genuine and honest buyer, this is the problem, practical problem. And I can tell you some of the practical problem, starting with until GSTR 2A came into the picture, even as a recipient buyer, I was not knowing that after collecting the tax, it is not deposited by the supplier when 2A was not available. There is doctrine of impossibility. Lex non cogit ad impossibilia. You cannot compel a person to do something impossible. 2A was not available. I paid the amount to defaulting supplier. Defaulting supplier did not deposit. There was no window available whereby I can cross-check that this defaulting supplier has paid or not paid. Even 2A has come, I can also argue further that 2A is not sacrosanct. 2A may not give the correct picture. Let's say I'm having 10 lakh rupees as a supplier. I'm having 10 lakh rupees my outward supply. But intentionally, I'm only showing 5 lakh rupees and depositing only 5 lakh. What happened to balance 5 lakh rupees, which I've collected and not shown and not deposited? So even though status in 2A will come as a file, but that is not the sacrosanct. There's no matching concept, ITC matching concept, which was introduced and emphasized in GST law, section 37, 38, 39, 41, 42, 43, 43A. This ITC matching and mismatching provision never got introduced. GSTR 2 and 3 never got implemented. But now everything falling back on genuine and honest buyer recipient. Having said that, my another argument is, and which is worth noticing, and we must pay attention to this provision. Okay, if supplier defaulted and did not pay the tax, even after collecting the tax, can you demand reversal? Where is reversal provision in GST law? Yes, if I look at section 73 non-fraud case, section 74 fraud case, you can go and collect this tax from the defaulting supplier, but where is the provision for reversal for the buyer for non-payment of taxes? Section 41 subsection 2, please note down, got notified from 1st October 2022. It was prospective clause, not the retrospective one. As per this section 41 subsection 2, it was stated that for non-payment of taxes by the supplier, you need to reverse credit. Very first time this provision got introduced, and prospectively, not retrospectively. I'm just giving food for thought. Can't it be argued before Honorable Court, my lord? Prior to 1st October 2022, there was no provision for reversal. Yes, there was one of the conditions, but there was no provision of reversal of credit by the recipient. It was very first time introduced prospectively from 1st October 2022. My argument. Alongside, I would like to draw your attention on the provision Rule 37A. Got introduced from 26 December 2022. Introduced by notification number 26/2022. What is this Rule 37A? Listen very carefully. It is very worth noticing, and you must carefully listen the same. Rule 37A saying, if your supplier, let's say financial year 22-23, let's take an example so that we can understand, for transaction pertaining to 22-23. You have taken credit and your supplier did not deposit the tax. Question is, can you take credit first of all? What is Rule 37A is talking about? Rule 37A is talking about you can take credit, but you have to follow the condition. Condition number 1, your supplier must pay this tax by 30th September 2023 through GSTR 3B. That is what Rule 37A is saying, that your supplier must pay by 30th September 2023. If your supplier does not pay by 30th September 2023, then you need to reverse credit recipient by 30th November 2023. If you don't reverse by 30th November 2023, then interest implication. And for interest, you must keep to your mind, interest going to be leviable only when this credit, which can be alleged as a wrongly availed credit, is being utilized. If it is not utilized, for my submission, interest is not applicable under section 50, subsection 3 of the GST Act. And subsequently, let's say your supplier paid this tax in April 2024, let's assume, then you can re-avail the credit. And for re-availment, there is no foundation of time limit, section 16, subsection 4. No time limit condition going to be applicable. So this is the first jurisprudence with the provision amended I have introduced and I have deliberated before you. coming back to the second important one. Recently, Kerala High Court, in the case of TIA agencies, an issue was that some credit is not reflecting in your two-way, whether this credit can be denied because it is not getting auto-populated or reflected in your two-way. This was the issue. And Honorable Kerala High Court has said that this credit, you can't say is not available just because it is not auto-populated in two-way. It can't be denied. And there are reason why it is not getting auto-populated. Reason could be maybe supplier has faulted with, he has shown B2B supply as a B2C. Or he has wrongly mentioned the GST number of recipient. Or place of supply which Delhi to Maharashtra should be Maharashtra, but wrongly shown as an intrastate. Did not file 1, but file 3B. It is not getting auto-populated in two-way. And the time period to rectify any omission or error as per section 37 for the GSTR1 is already or is also passed away. So what happened? It is not getting auto-populated. But you are having invoice, you have received goods and services, your supplier has paid taxes, you as a recipient also regularly filing GST return, GSTR 3B under section 39. Why credit would be denied? In this particular judgment, the Honorable Supreme Court judgment was cited Bharti Airtel. And in Bharti Airtel, it was categorically said that two-way is only facilitation. Only facilitation is not determining factor, even though department has issued circular number 183, 193 and talking about reconciliation and certification, but whether two-way is really determining factor. There's no provision in the GST law as well. It was introduced by way of rule. Fifth condition which got introduced from 1st January 2022, it was only 2B. So Kerala High Court judgment, the agencies looks like to me good judgment on the legal footing. Third judgment, time limit to avail credit in GST. Section 16, subsection 4. Earliest of to date. Due date of furnishing return under section 39 for September following the end of relevant financial year, which is quite obvious 20th October of next financial year, which is extended to 30th November, effective from 1st October 2022. And prior to that, it was due date of furnishing return under section 39, 3B, due date for September, following the end of relevant financial year, or date of furnishing annual return, whichever is earlier. We have seen in the past that there are so many recipient and buyer has faulted with. In one of the case, March 2020 return GSTR 3B was due by 20th October 2020. But this taxpayer registered person has filed 3B on 27th November 2020. So after due date, 20th October 2020. And he has filed 3B along with late fees, because this provision was existing during those days because of COVID-19. So credit was denied because it was not within time limit as per section 16, subsection 4. Matter gone before Honorable AP High Court in the case of Thirumalakonda Plywood. And recently, Patna High Court has also given judgment in the case of Jayam and Company. An issue which was raised before the High Court was, point number 1, that section 16, subsection 2, starting with the non-obstante clause, notwithstanding anything contained in the section, So, meaning thereby overriding section 16, subsection 4. No registered person shall take credit unless satisfied the following condition. So, it was interpreted by the petitioner that section 16, subsection 2 is overriding section 16, subsection 4. Second, if GST department is allowing late filing of 3B with the late fees, then petitioner contemplated, then extended time period would be available for availing credit. And third, prayer was that this time limit condition under section 16, subsection 4 is violative of article 14, 19, 1G and article 300 capital A. And let me tell you, there are a lot of writ petition in different high court. 2 judgment as on date, AP High Court, Thirumalakonda and Patna High Court has gone against. Let me tell you the basic background, and we must take a note of it. Whether GST input tax credit is a vested right, which we normally argue. To me and for my submission, it is concession or benefit, subject to satisfaction of certain condition. Once conditions are satisfied, then it becomes vested right. Please bear in your mind, it is concession or benefit given by the law, specific law. Once you satisfy the condition on date of availment, it becomes vested right. And once it becomes vested right, then it cannot be taken away by any procedural provision, like Philcourt Trade Center, Honorable Supreme Court in the case of transitional credit. So, for my submission, this is concession or benefit. It becomes vested when we satisfy the condition. If conditions are not satisfied, then it is not vested right. Second, what is the context of section 16, subsection 2, starting with the non-obstantly clause with versus section 16, subsection 4? Honorable AP High Court has said this is in the context of, and in the context means this need to be read separately. Just because section 16, subsection 2 is starting with non-obstantly clause, it is only for the purpose because section 16, subsection 1 is giving the right to the registered person to avail credit. But availing credit with a condition under section 16, subsection 2. So section 16, subsection 4 is nothing but another condition within the time limit to avail credit. So this is different context. So it cannot be stated it is overriding. Coming to violation, Article 14, 19, 1G and Article 300 capital A categorically ruled out it is not violated. And 2 back-to-back judgment coming from AP High Court and Patna High Court. An important one which was there that department allowed late filing of 3B with the late fees, whether it can accelerate your time period for availing credit. Honorable Court has said that they have allowed filing of 3B with late fees does not mean that your time limit get extended and you are being relieved. You have to file within time. So those who have taken a call that we will pay late fees and file the late 3B beyond the time period specified under section 16, subsection 4, it is rider for all of us. We have to wake up. And these 2 judgments contrary to our perception in case you have taken that call. Coming to the 4th. Nowadays, I'm finding proper officer is cancelling GST registration here and why for lot many regions. Let me first tell you what are the provision in GST law whereby proper officer is proposing cancellation of GST registration. Section 29, subsection 2. The specific condition proper officer may cancel GST registration if there is any violation of GST law and rules made thereunder. Such a wide provision. Second, if you're a composition dealer and you fail to file your return within specified time period. Third, if you are a regular dealer, registered person other than a composition dealer, and there is fault on your part for filing return continuously for specified time period, 6 months. Fourth, you have taken voluntary registration, but you did not commence your business within 6 months from the date of registration. And next, fifth one, section 29, subsection 2, clause E, that registration is being obtained by means of fraud, willful misstatement, or suppression of facts. So these are the ground. They are picking up either or region and sending so-called notice with one-liner. In one of my client case, for which I filed writ petition before Delhi High Court, I've got the judgment. That is the reason I'm sharing with you. Hopefully this judgment will come within a day or two. That one of my client got so-called notice that in so-called notice, proper officer has alleged that this client has taken registration by way of fraud or willful misstatement or suppression. No other thing, nothing extra is being explained in this so-called notice. And they wanted me to reply within 7 days. And immediately from the date of so-called notice, which was 16th May 2023, they have suspended my registration. What is the option available to me? Before I go to the option, listen very carefully. There are 3 ways we can look at. The first, either I could have filed revocation application, but that is only after order is being passed. So let me first complete. I submitted my reply to the so-called notice, and I wanted department to let me know why and on what ground. Department is alleging that I've taken registration, and registration was taken from 3rd May 2018. And I was continuing with the compliances. How all of a sudden in 23, they are alleging that I've taken registration by means of fraud, willful misstatement. So I wanted them to let me know the reason for that. They did not consider my reply, did not give me opportunity of being heard, did not cite any reason whatsoever for the allegation made, passed order cancelling my GST registration on 29th May 2023, and that too with a retrospective date, 4th May 2018. After having this order, I was looking at the options available within the GST law. Option 1 was revocation application under section 30, read with rule 23. And under section 30, there's a provision within 30 days. But this provision is now being amended from 1st October 2023. And when you go to rule 23, they are giving time period 90 days plus extended time period 180 days, which can be extended by commissioner or any proper officer authorized by additional commissioner or joint commissioner from 1st October 2023. So one option was revocation application. Second, I could have also filed appeal in GST regime under section 107, and for that time period is 3 months plus 1 month for the condonation for reasonable cause. And third, writ petition before High Court under Article 226 or 227 to the Constitution of India. I have gone for filing writ petition before Honorable High Court, Delhi High Court, because there was violation of principle of natural justice. Now, let me tell you what is this context which I'm referring to. Having option of revocation application, I did not opt it for. I did not opt it for filing appeal also. I have filed writ petition before Delhi High Court, and I have prayed before Honorable Delhi High Court, my lord. They have issued a so-called notice and alleged that my registration was obtained by means of fraud, willful misstatement or suppression, but nothing else they have explained in the so cause notice. When I replied within 7 days, as stated, even I requested, give me the reason why and on what ground. They did not consider my reply. So neither they consider my reply, nor they give me opportunity of being heard, nor they cited any reason. They have cancelled my registration with no citation, no reason, nothing, and that too with retrospective date. My lord, there's a violation of principle of natural justice. Here I want to draw your attention. Having alternate remedy, revocation application or appeal under the GST law, whether you can go for the writ petition, option is available. You can go for writ petition. You have to prove 4 parameters. Either there's a violation of principle of natural justice, which was the case I have demonstrated before Honorable Delhi High Court, or violation of fundamental right, or excessive jurisdiction, or you're challenging bias of law. Honorable Delhi High Court has set aside impugned so cause notice and order cancelling my registration. And fortunate part, Honorable Delhi High Court has imposed cost 5,000 rupees on revenue as well. So this is one of the judgment on cancellation. So there would be different factual position where your registration get cancelled. You must check what are the ground available to you and how you can defend yourself. Coming to the 5th one. Another writ petition we filed before Honorable Delhi High Court, and the context was for refund. In GST, there are 2 supply, which is called zero rated. One is export of goods or services, and supply of goods or services to SEZ unit or developer. And 2 options available. Either you can follow under IGST route, or you can follow the route of refund of ITC under Rule 89, rate with Section 54, subsection 3 of CGST Act. Petitioner in this case has gone for LUT model refund of ITC, and their refund was denied on the pretext. Rule 89, subrule 4, clause C got amended from 23rd March 2020. And what is this rule? Let me tell you. As per this rule, they have said the value of export going to be restricted 1.5 times of like goods domestically supplied by same or similarly placed supplier. So if my export is say 1,000 rupees assumed, but if I'm domestically supplying the same quantity like goods for 300 rupees, maximum I will get 450, 300 into 1.5. That is what the implication. I filed a writ petition before Delhi High Court, and I prayed before Honorable Delhi High Court, my lord, this amended provision is prospectively implemented from 23rd March 2020. Thereby, they could not have denied my refund for the prior period when I have made the export. And prior period means I made the export from October 2018 to September 2019. They could not have applied this provision, which is prospectively applicable, if at all applicable, for the past period export. This was my first prayer. Second prayer, and we must know before I go for it, do we find any condition? When I look at section 54, subsection 3, and let me tell you, the department has filed counter, and in their counter, they have relied on BKC footstep Honorable Supreme Court judgment. And as per them, a rule can be made and condition can be created. I pleaded before Honorable Delhi High Court and I said, my lord, condition which is being made by rule is possible only when provision of the act is permitting. In BKC footstep 54 subsection 3, in case of refund of inverted duty structure, it was specifically stated refund only on input, not on input services. Thereby, the rule which was there pertaining to refund of inverted duty structure held valid. But in my case, there are only two conditions: that it should not be subject to export duty, and second, you are not claiming drawback. So there's no condition per se. And fortunate part, I was having Karnataka High Court judgment pari materia on this particular provision, which was relied by Honorable Delhi High Court. So they have refrained on constitutional validity because we have challenged that it is violative of Article 14 also. But they have refrained and they have said we are abiding by Karnataka High Court and we are not going contrary, but your refund is being allowed and fortunate along with interest. And the last part of my theme presentation, just 2-3 minutes more, and then I will sum up. When we are talking about time limit to avail credit, there's a time limit to file appeal also in GST regime under section 107. Within time limit, we have to file appeal 107, 3 months plus 1 month. What happens if we are not filing appeal within time? Can we argue? Can we counter? Can we say that this order was not available to me, thereby I could not file my appeal within the time period? Let me tell you, Patna High Court in the case of Biswanath Traders and Issue Watch, which is upheld, this Patna High Court judgment was upheld by Honorable Supreme Court. Order was passed sometime on 12th March 2022. But appeal was filed on 8th August 2022. Even after considering Honorable Supreme Court suo moto judgment for the COVID period, excluding the specific time period from 15th March 2020 to 28th February 2022, excluding that period, this appeal was filed beyond the time limit. First appellate authority has rejected the appeal only on limitation. He did not heard anything on merit, said it is beyond the time limit. Writ petition was filed before Honorable Patna High Court, and Patna High Court has said, since you have not exhausted alternative remedy available to you within the time limit, and it is specific law, you cannot go to the General Limitation Act. You could have filed within the time period. Since you did not file, now your appeal is rejected. And again, it has gone to Supreme Court, and Supreme Court has upheld the judgment of Patna High Court. Is alarming for all of us together. We should not be casual. And sometimes we argue that we did not get the order. Sometimes we argue our lawyer or advocate got the order. We were not knowing about it. Sometimes we argue, no, it was kept here. No, I was not knowing whether it is on my portal, it is being uploaded. Then I would like to invite your attention on section 169, which talks about service. What is the meaning of service in GST law? Service of any notice, order, decree, summon. And there are alternative options made available, and word use sell. They are not saying may. It can be by courier, registered post, speed post. It can be sent to your email ID. Whatever email ID, if it is your ID, then your ID. If it is advocate ID or your tax professional's ID or chartered accountant ID, to their ID, because we have provided that ID only. It might be possible it may go to junk and spam. It can alternatively uploaded on your ID on portal. You have to cross-check and verify. You have to keep watch on portal as well. It may be publication in advertisement, local newspaper of your jurisdictional area. Or it may be affixed on your last known address at the door. If that is not possible, it can be affixed even on the notice board of the judicial proper officer, jurisdictional proper officer. So these are the alternate options given for a service. So you have to really prove yourself if there is not a service. But for proving that, you must have sufficient proof within your hand. Otherwise, now department going to cite this Patna High Court judgment, which is upheld by Honorable Supreme Court. So time is the pause today. There are so many other speakers also. I do not want to extend my theme presentation, but I took up 6 different legal jurisprudence to ignite your mind and invite your attention that we are going to have very good webinar on different topic with different dimension, different judgment coming in, and a preparation for all of us together. Yes, we all are trying to make GST good and simple tax, whether it is reality or myth. We all know about it, but we have to really walk the talk, and we have to be together. Together, we will make difference. This is the endeavors of Indirect Tax Committee, PhD Chamber of Commerce. We are trying our best. So this webinar is towards latest GST legal jurisprudence. Now I'm handing over to Mr. Nanda to take it forward. Nanda ji.
Thank you, sir. Thank you very much for your. Now, remind to Mr. Tushar Agarwal, sir. Is a present in presentation supply. Mr. Tushar Agarwal is chartered accountant and working as a co-founder at Pratham Advisor. He is a more than 10-year experience in indirect tax. He has worked as a more than 8 years with Lakshmi Kumar and Sridharan attorney. He is also deployed by government department and GST for implementation of GST. Worked closely with the government officials. He has worked extensively with the government of India, designing the GST returns audit and other formats. Tushar sir, please.
Thank you, Namazi. I'm just sharing my screen.
Yeah. Yes, sir.
Good evening, friends. At the outset, I would like to thank IDT Committee of PhD Chambers of Commerce for giving me this opportunity. In this session, we will be discussing some of the latest jurisprudence in respect of the topic supply. So what we have done is that we have bifurcated these judgments into various buckets. We will be discussing 5 major issues. First, taxability of vouchers. Second, interplay between Schedule 1 vis-a-vis target-based scheme. Third, taxability in respect of recoveries made from the employees. Fourth, taxability of EV charging stations. Fifth, real estate related transactions, taxability of charges recovered from customers. So we will be discussing the judgments which have been delivered and the rulings which have been delivered in respect of these topics and critically analyze all these cases. To start with, taxability of voucher. Karnataka High Court in the case of Premier Sales Promotion Private Limited. Friends, in this case, SSC was engaged in procurement and supply of prepaid vouchers such as gift vouchers, cashback vouchers, e-vouchers. Karnataka Authority of Advanced Ruling held that supply of these kinds of vouchers is taxable as goods. Thereafter, Appellate Authority also affirmed the order passed by the Karnataka AAR and held that supply of voucher is nothing but taxable as goods. SSC filed the writ petition, and the question before the court was whether supply of these vouchers, face value vouchers of 100 rupees, which can be used against redemption and which can be redeemed against supply of goods and services, whether supply of these vouchers per se, will it qualify as a supply of goods or supply of services? The Honorable Karnataka High Court held that these vouchers are nothing but mere instruments accepted as consideration for supply of goods or services, and they have no inherent value of their own. They are more in the nature of a pre-deposit and not in the nature of supply of goods or services. They held that supply of voucher per se is not taxable. What is taxable is only the underlying supply of goods and services. These vouchers are nothing but an instrument accepted as a consideration for supply of goods and services, and hence the same will not be taxable. In fact, if we see the judgments related to the pre-GST regime also, there also the Supreme Court in the case of Sodexo, as we see India Private Limited, has held that these food vouchers, etc., per se do not fall under the ambit of goods. They are only accepted as a consideration towards the supply of underlying goods and services. Friends, we have a specific section, a definition of voucher, as well as specific provisions related to voucher under the GST regime. Voucher is neither a money nor actionable claim nor supply of goods or services per se. There is a specific definition wherein voucher is defined, which says that voucher is nothing but an instrument considered for supply towards goods and services. Voucher cannot be goods per se. Why? Because goods is something which has an inherent value of their own and which is easily transferable. Whereas this voucher is nothing but only an instrument which is considered as a payment towards the underlying supply of goods and service. Further, these vouchers purchase neither an actionable claim. The actionable claim is something which is an unsecured debt or a beneficial interest in a movable property. Voucher is not an unsecured debt. You cannot redeem it in cash. It can be redeemed only against certain goods or services. So they will not qualify as actionable claim. They are also not money akin to credit card, debit card, etc. So voucher is nothing but only a deposit which is made to you, and what is actually taxable is only an underlying supply of goods and services, and Karnataka High Court has rightly held so. Coming to the time of supply provision, the law is very clear that when this underlying supply of goods or services will be taxable, if these supplies are identifiable, then tax in respect of such goods or services has to be paid at the time of issuance of voucher. However, if these supplies are not identifiable, then tax has to be paid at the time of redemption of voucher. For example, I have issued a voucher worth ₹100, having a face value of ₹100, and the same can be redeemed in the store, wherein you can buy a product having GST rate of 5%, 12%, 28%, etc. The supplies are not identifiable. Tax has to be paid at the time of redemption of voucher. Another example, you are issuing, say, a restaurant chain. Restaurant chain is issuing a voucher state of ₹100 face value. It can be redeemed only against the restaurant services. So supplies is identifiable. Accordingly, at the time of issuance itself, there will be a tax on ₹100. Again, very important part which we have to consider is that what you mean by supplies are identifiable. Now, in our example, when we said that we have issued a voucher by a restaurant chain, wherein this voucher can be redeemed by against the restaurant services only. So we are aware that this voucher will be redeemed against the restaurant service, but we may not be aware whether this will be redeemed against in my Gurgaon outlet, or it will be redeemed in my Hyderabad outlet, Bangalore outlet. Bhupa Hospitals Limited, High Court of England and Wales, on a similar context, has held that until and unless all the parameters of supplies are clear, that is, what is the location of the supplier, that is, from where I am making the supply, what is the nature of the underlying supply, what is the place of supply, until and unless all these parameters are clear, we cannot say that the supplies are identified. So a restaurant chain having restaurants across India, they issue a face voucher with a face value of ₹100, and which can be redeemed at any of the outlets. Today, we are not aware where it will be redeemed, whether Haryana, whether Bangalore, etc. So to my mind, we cannot say that supplies are identifiable. Still, supplies are not identifiable, and the tax has to be paid at the time of redemption of voucher. Moving on, with regard to the intermediaries who are engaged in purchase and sale of vouchers. So one is the issuing company who has issued the voucher, and the same will get redeemed against certain supplies and goods. Further, there are intermediaries who purchase and sell the voucher and retain a margin. So all those intermediaries who are engaged in purchasing and selling the voucher and retaining the margin, they are facilitating the supply of the main goods and services by way of purchase and sale of vouchers. And accordingly, there will be a GST exposure on the margin retained by such kind of intermediaries. If they purchase voucher of face value ₹100, they may purchase at ₹90, sell it at ₹92, then the margin retained by them, that is taxable at 18%. Moving on to the next issue is taxability of EV charging station. Recent advance ruling Karnataka. In this case, SEC was setting up public charging station for charging of electric vehicles, and they were collecting two types of fees in the name of electric vehicle charging fee. First was the energy charges, second was the service charges. The issue before the authority was whether charging of battery and collection of these two components should be treated as supply of services, or the same should be treated as supply of electricity on which there is no tax. The ruling held that applicant activity of charging of battery does not involve sale of electricity as electricity. Rather, electricity energy is put to use only as consumable. They further held that the supplier does not have a license under the Electricity Act 2003, and hence they cannot supply electricity per se. So the activity which supplier is doing is nothing but provisioning of services on which entire GST of 18% is payable. So the ruling held that this activity of EV charging facility is nothing but provisioning of services on which 18% GST is applicable. Contrary to this, there is a recent European Court of Justice judgment. On a similar situation, they have held that in such cases of EV charging station, what they are providing is nothing but a supply of electricity, which is the principal supply. The provision of technical support or IT infrastructure for customer is nothing but ancillary to the main activity, and ultimately what customer is intending is nothing but supply of goods, which is electricity. So internationally, the very same transaction has been interpreted as supply of electricity. If it is interpreted as supply of electricity, I don't have to charge GST on my output. Simultaneously, I will not get input. However, if you see this ruling, it says it is nothing but supply of services only. If it is a supply of service, 18% GST is applicable. Simultaneously, I will be getting my input tax credit also. Friends, to appreciate these judgments, let us understand how this system, EV charging system, works. There are generally various forms of energy. One is called electrical energy, another is called chemical energy. So practically what happens is that the electricity energy is being consumed and converted from electric energy to chemical energy. And this is the chemical energy which is being stored in the battery of the electric vehicle. So what is stored in the battery of the electric vehicle is this chemical energy. So EV charging station converts this electrical energy to chemical energy and stores it in the battery of the electric vehicle. Thereafter, this battery per se produce and supply energy subsequently. So what customer is provided is with the chemical energy. Ministry of Power, in the context of Electricity Act, has held that the activity of provisioning of charging facility cannot be treated as sale of electricity or distribution or transmission of electricity, and there is no requirement of taking any license under the Electricity Act. The said activity has always been treated as conversion of electric energy into chemical energy, which is stored in the battery. So Ministry of Power has given a clarification that you are not supplying the electricity per se, hence there is no requirement of taking a license. Friends, the Electricity Act and this clarification has a persuasive value in understanding the nature of the transaction, wherein Ministry of Power itself has clarified that this transaction is not of supply of electricity. To our mind also, what customer is looking at the entire transaction, not as purchase of electricity, but getting a facility of charging the vehicle. So the main intent of the customer is also to charge the vehicle. And what is being actually provided is only a chemical energy and not electrical energy per se. What is covered under 2716 is electrical energy and not chemical energy. There is a series of jurisprudence which says that supply of goods will be treated as supply of goods only when chattel is provided as chattel. Here, I'm not providing the same as electrical energy. So in our view, the same should be taxable as provisioning of services on which 18% should be applicable. So ruling has correctly, this advanced ruling has correctly held that 18% GST should be applicable on such kind of transaction. Another interesting issue is interplay between Schedule 1 vis-a-vis target-based scheme. In the recent case of Orient Cement Limited, in this case, the taxpayer was providing gold coins and white goods as a part of target-based schemes. So they were supplying these white goods, gold coins, etc. on achievement of purchase targets and under the schemes communicated to the distributors in advance. The issue before the authority was with regard to the availment of credit on this gold coins, white goods, etc. supplied to the dealers. In the context of analyzing the credit, they made a very important observation. They said that all these white goods, gold coins, etc., are permanently transferred to the dealer. And all these goods will qualify as business asset, and accordingly, the present transaction will be covered under entry 1 of Schedule 1 of the CGST Act. Friends, Schedule 1 specifically covers permanent transfer or disposal of business assets wherein ITC has been availed. So what the ruling held is that there is a transfer of these white goods, gold coin to the distributor. The same should be covered under Schedule 1, entry number 1. There is a permanent transfer of these business assets on which ITC has been availed, and hence there is a output GST which is payable by the taxpayer. Friends, in our view, these observations of the ruling and the authority is incorrect. There is no concept of free supplies under any promotional scheme. There are series of judgments which has held that in case of promotional and target-based schemes, the cost of the free supply is already embedded in the main consideration of the main product. So even in fact in GST also we have a circular 92/11/2019 which says that buy one get one schemes, etc. All these are marketing schemes. Nothing is free of cost. The consideration received for the main product is in fact the consideration for the entire product. Internationally also in various clarifications has been held that these are not free supplies. So Schedule 1 can be attracted only if a supply is without consideration, whereas in our case, supply is with consideration. And what is the consideration? The consideration of the main product is the consideration for both the items, the main items as well as these white goods, gold coin, etc. So in our view, Schedule 1 will not get attracted in this particular case. However, the problem which practically taxpayers can face is the supply may result into a mixed supply. If I'm supplying medicines and under a target-based scheme, I'm giving refrigerator free of cost as a part of the target-based scheme, then there are chances that the supply may get mixed supply and accordingly higher rate will be applicable. So it is always advisable that in all of these target-based schemes, all my freebies, all my goods should be of the same rate as applicable on the main product or a lesser rate, which is always advantageous for the taxpayer. The next issue is taxability of recovery from employees. In the recent advanced ruling, in the case of Tata Autocom Systems, the authority held deduction of amount from the salary of the employee for canteen facilities is not considered as supply under Section 7 of the CGST Act. Similarly, they held that recovery of transportation facilities from the employees, it is not a supply of service. And the reason given by this authority is that they relied upon the CBIC Circular 172/04 and held that all these facilities are in the nature of perquisite given by the employer to the employee. There is no underlying supply and all these recoveries will not be taxable. Similarly, the authority of advanced ruling in Gujarat, in the case of EI Engineering, held that subsidized deduction cannot be considered as supply under Section 7 of the CGST Act. They also relied upon CBIC Circular 172/04 and held that perquisites provided by the employer to the employees in terms of the contractual arrangement cannot be regarded as supply. Friend, on this particular issue of recovery is made from the employees, we have various kinds of judgment, both positive as well as negative judgment. When we talk about positive judgment, we just saw two judgments. Apart from that, there are other judgments which have said that all these recoveries does not lead to taxability and is not covered under the definition of supply. In fact, in the case of Amneal Pharmaceutical, the ruling also held that the authority, the companies which are not retaining any profit margin while collecting employees' portion of canteen charges, the transaction cannot be said to be made without consideration and hence not taxable. On the contrary, there are negative rulings also. Under service tax regime also, internationally also, there are judgments which say recovery made by the employer from the employees for provisioning of services is taxable and liable to GST/service tax. So friends, we have both kinds of judgment, positive judgments, negative judgments coming. In our view, circular, all those judgments which have relied upon the circular 172, circular only talked about free of cost facilities or the perquisite which you have provided as a part of the employer employment contract. However, in a situation where I'm running a canteen or I'm providing any other transportation facility and I'm recovering certain amount from the employees, then there is a supply of service from me to the employees. I'm providing them canteen facility, I'm providing them transportation facilities in pursuance of which I'm making a recovery from them. To our mind, such recovery from employee should be covered under the definition of supply. The definition of supply is very wide. It means to furnish anything, to provide anything. Further, the same transaction is also in the course of business. In the course of business does not mean that you have to have a profit. Even a transaction without profit can be said to be in the course of business. In fact, recently, Supreme Court, in the case of NHPC, versus State of Himachal Pradesh in the context of passenger tax has held that provision of transportation facilities to its employees will fall under definition of business, and it is not necessary that it has to be the primary activity. All ancillary activities are also included, and this is an ancillary activity. Similarly, the definition of business in GST is also very wide. So the way our GST law is worded, the definition of supply is very wide, and there is a exposure on recoveries made from the employees. However, commercially relying upon this advanced ruling, positive advanced ruling, if someone wants to take the benefit, they can go ahead. Moving on to the next ruling is in the case of Eden Real Estates. In this case, the developer was selling the flat to the customer. On sale of flat to the customer, there is a GST of 5% or 12%. Simultaneously, they were also providing right to use the parking space. So customer was also getting one parking space along with the purchase of the flat. The authority held that sale, transfer of right to use car parking services and construction services are separate services, and they are not dependent upon each other and not naturally bundled. They held that this provisioning of car parking services per se should be taxable at 18% and not the same rate which is applicable on basic sale price. In our view, this ruling is incorrect. Whenever a customer comes to book a flat, at the time of booking, he takes various kinds of facilities from the builder and pays various kinds of charges, say basic sale price, PLC, car parking charges, etc. These are the services which are available and are ancillary to the main services of construction provided by the builder to the customer. No customer can independently come and avail car parking services without purchasing the flat. So this is nothing but incidental to the purchase of flat, and accordingly, all these charges also form part of the stamp duty also. At the time of conveyance date, all these charges always form part of the stamp duty for the purpose of conveyance, and what forms part of stamp duty is only those services which are in relation to construction of the flat. Accordingly, in our view, this judgment is incorrect, and car parking charges and other charges like PLC, water connection charges, electric meter connection charges, various kinds of charges collected by the supplier from the buyer should be taxable at the same rate as applicable on BSP. Coming to our last case of corporate guarantee, there is a lot of confusion on the recent Supreme Court decision of Edelweiss Financial Services Limited in the context of taxability of service tax on corporate guarantee. The Supreme Court has held that issuance of corporate guarantee on behalf of the group companies is without consideration and hence should not be taxable. Friends, what was leviable under service tax was only those services which were made or agreed to be made for a consideration. So service tax was leviable only on those activities which was undertaken for a consideration. There was always a quid pro quo between supply and consideration. Whereas under GST law, we have a specifically Schedule 1, which covers transaction between related party, even if it is without consideration. So the charging section specifically covers certain transactions which are even without consideration. So the ratio of this judgment should not be applicable in GST regime. In GST regime, Schedule 1 per se is wide enough to include transaction between related parties. And if a holding company is giving corporate guarantee on behalf of bank to the bank on behalf of subsidiary companies, then this should be taxable. And because the definition of supply is very wide, though we may take certain arguments from income tax judgments wherein it has been held that corporate guarantee per se is not a provisioning of services. The argument which have been taken is that this is in the nature of quasi capital and shareholder activities to provide or compensate for the lack of core strength of raising finance and should not be considered as provisioning of services. But to our mind, the definition of supply in GST is very wide, and this provisioning of corporate guarantee per se may get covered under the Schedule 1, entry number 2. In fact, DGI across India has been doing a lot of investigation on this particular issue. So one is always the taxability, and second is always the valuation, how to value the corporate guarantee. So relying upon this, service tax judgment may not put hold in GST regime. With this, I end my presentation. Thank you.
Thank you, sir. Thank you very much. Thank you. My request to Miss Lipika Rastogi from Nitya Tax Associates. She discussed about the cross charges. Deepika is a chartered accountant with over 6 years of experience in indirect tax advisor in the tax services. Yeah, Ms. Lily.
Yeah, so
Yeah.
thank you, sir. And at the outset, I would also thank Indirect Taxes PhD Committee for giving me this opportunity. So just give me a moment. I will just project my screen.
Yes, visible.
Yeah, thank you so much. So unlike my preceding topics, or I should say my succeeding topics, there have been recent jurisprudence on those topics, be it supply, be it valuation. But if I like specifically talk about my particular topic, yes, they were jurisprudence, but they were in the earlier years of GST. Say in 2018, it started with Colombia, then it went on and on. But now the GST Council has come up with the circular on this very aspect. So my presentation, or I should say, my topic will just revolve around two things. First, I will just quickly take you through the provisions surrounding ISD cross charge, and then we will talk about the circular which was issued in July 2023. So as you see that this ISD, this cross charge has been a very controversial topic. So the taxpayers were bewildered that whether they should obtain ISD registration or they should go for this cross charge for the common input services. So in simple terms, if I see there is no such terminology used cross charge under the law, GST law. The GST Act just talks about distinct persons, and it talks about supply, and it talks about schedule. So to start with, so there is so ISD has been defined under law, which says that ISD is nothing but an office of the supplier of goods or services which receives those invoices, and then thereon they issue a tax invoice for distributing such services. Then there is section 20, which talks about the conditions for distribution of the ITC by ISD. Then there is another section which like says that the taxpayer, if they choose to distribute ITC through ISD, then yes, they have to go for this compulsory registration. Now there is Schedule 1, which like says that the supply of services, even if it is made without consideration between distinct persons, shall be deemed as supply. And what is distinct person is the registered persons having same PAN. So it is being defined under section 25 subsection 4. And the last part talks about valuation rule, though it has been discussed by my co-colleagues in the preceding sessions, that there is a second proviso which gives liberty to the taxpayer to adopt any value which they have declared on the invoice if the recipient is eligible for full ITC. And this rule 28 only deals with the valuation between distinct persons or related parties. Now, coming to the circular part. So this circular has actually ended this ongoing dispute to some extent, or I should say the circular is more taxpayer friendly now. So the circular has been divided into two parts. First is the third party services, and the second is the internally generated services. So to start with the third party services, so the third party services, it means that where the HO, they have procured services from a third party, which is meant not only for its own benefit, but for the benefit of the other branch offices which are under same PAN. So what the circular has said, or I should say the other way around, that the taxpayer who like has been following either cross charge or ISD for these third party services, then they can sit back and relax. Now they don't have to do anything. But however, where the taxpayer has neither gone for this ISD or nor have issued tax invoice under section 31 for distribution of ITC on these third party services which are common, then yes, they like have the option to either follow ISD or to go for the cross charge. Now, before this ruling, yes, there have been contrary as in rulings which like said that yes, ISD is compulsory, that you have to follow ISD even for the distribution on third party services. So there was Maharashtra AAAR in the case of Cummins India, and Tata Sia Airlines, that's a AAR in of the Haryana state. So as I said, that for the third party services, the taxpayers have the option to either go for ISD or to adopt this cross charge mechanism. Now, apart from that, the press release also said that the ISD, it may become compulsory in future, and for that they will make those changes in the law. So yes, so to say that if the taxpayer is currently following ISD for this distribution, so it is better that the taxpayers can continue with this, considering this change in the foreseeable future. Now, coming to the second part of the circular. So the second part of the circular, it talks about the internally generated services. Now, what do we actually mean by internally generated services? So in the layman terms, we can say that the HR of the HO is, working for the head office and even for its other branch offices. So if we see that the HO is providing services to both HO and the BO. Similarly, though the circular has not dwelled upon what does internally generated services it mean, but in our view, like what can be the fate of these internally generated services? So like, for instance, there can be R&D support, like where a company has its own R&D center, and so that R&D center is providing R&D support services to the company itself. Then there like can be marketing support services, then there can be leasing of goods, etc. So the circular has further subdivided into two parts, that where the full ITC is eligible to the recipient. Now, as we discussed, there is a rule 28 which gives benefit to the taxpayer, saying that any value which is declared on the tax invoice shall be deemed to be the open market value. And there have been favorable rulings in this regard, say AAAR in the case of Cummins India and CHEP India in the case of Maharashtra AAAR. However, where no like tax invoice has been issued, so the circular has said that we shall deem that the value is nil, so nil shall be the value. But in our view, the value should exceed nil, and the reason could be that this valuation is a machinery provision, and like there has to be some value for the calculation part. Secondly, the GST portal also don't accept nil value. So yes, the taxpayers are advised to issue a tax invoice with some nominal value, provided that full ITC is eligible to the recipient party. Now, coming to the second subcategory, it says that where full ITC is not available to the recipient. So now the circular has said that the portion of the employee cost is not required to be cross-charged. Now, if we see that there have been contrary advance rulings in the past, be it in the case of Profi Solutions or the Columbia, which like specifically said that the employee cost has to be cross-charged. But now this circular has come as a relief that for the internally generated services, it is not required to do the cross-charge of the cost of the employee salary. And if we see the logic also, so it dates back to the erstwhile service tax regime where there were rulings that an employee is an employee of a legal entity. It is not an employee of a HO or a BO individually. So yes, this has actually come as a relief to the taxpayers, and I see that many of the participants attending here, they must have received notices regarding this ISD cross charge and cross charge of salary portion, etc. So yes, this circular has put rest to these disputes even for the past period, and going forward, yes, the taxpayers can streamline this process. Now, so this circulars was very much restricted to the internally generated services, but yes, we can draw this analogy for other services as well, like say for example, secondment issue also. So basically, it is between the overseas holding company, the Indian subsidiary company. So yes, we can always take that advantage of Rule 28 and so on. So that was all from my side. So I kept it short considering the paucity of time and to make it more I should say interactive, or to make it short and crisp to the point. So if anyone has any question, they can raise their hand and ask me.
Very nice, very nice. Thank you very much. Thank you very much.
Thank you.
Now request to Shivam Mehta ji, presentation about the valuation matters. I want to introduce. Mehta ji is a partner in Lakshmi Kumar and Sridharan. He has been practicing as a tax lawyer for more than 20 years in the Lakshmi Kumar and Sridharan. The area of practice covers service tax, central excise, sales tax, GST. Mr. Mehta is a chartered accountant and lawyer also. So you are on mute, I think.
Yeah, thank you, Nanda ji. My screen is visible properly.
Yeah, sir. Coming. Your PPT also coming on the screen.
Okay. All right. Yeah, thank you so much for the introduction. Good evening, everyone. Hope you are having good time attending this webinar. Just one request, Nanda ji. I think it has been time that we meet physically. For more than one reason, I'll tell you. One is these are very complex matters. To explain it while looking at the screen without realizing how much people are understanding is very difficult. And sometimes you give us topics, I get into, my only problem is while preparing for the session, what judgment I should include, what I should exclude, what all I should cover, so that I can explain in a virtual background about those topics. If it is physical, at least I don't have to cut down my research.
Because we're trying to on October. October, but mainly
I think October should be the time that next session should be physical. Virtual, we will not attend. At least I will not attend. I'll tell you also one more reason. By very nature, you used to give plants to all the speakers and the participants. Now that with virtual, those plants are not being distributed, so also it is against the nature what you are doing. So Why virtually you are only introducing us, telling us he's a partner, 20 years, 15 year experience. No plants are being planted. Earlier, there was a dual purpose of this session. One was to emanate the knowledge, another was to emanate the good oxygen also. So I think we are only serving one purpose by through this webinar. Another is getting this thing.
So I mean, mainly the more participant, 90% are chartered accountant, company secretary, and CMA advocates are in the panel now.
We can
In
have.
the-
I think I spoke to Vimalji also the other day. We can have a joint this thing. Those who want to join through virtually, they can join virtually. I think we have done it in the past and it was pretty successful.
Yeah, so many times. Yeah.
Yeah. So that we can do. Now coming back to the topic, considering
sir,
the time
please.
frame, I think there is one more or two more speaker after me.
Okay.
Quickly, I tell you, I mean, what I'm going to talk about is only the contentious issues so far as valuation is concerned. Now, with all these complex topics which my colleagues Tushar and Lipika has taken on supply, cross charge, it's a natural tendency when it comes to valuation, which we take it easy. That okay, valuation is something, whatever he's paying me, I have to pay tax on it. But that's not correct way to look at it. I'll touch upon 3 to 4 complex areas. One is, of course, condition of contract versus non-monetary consideration. As in, when it can be said that he is giving me something as a consideration for the supply of goods or services, and when it is what he's doing is a condition of the contract. That's a very, very crucial aspect. And there has been a lot of litigation in the past also. Many people are aware of it now that so far as excise is concerned, on this very issue, that when the Maruti gives the design to the auto component manufacturers, whether it is an additional consideration which is flowing to the auto component manufacturer and whether he was supposed to pay excise duty or not, all that there is a order which has been passed. The matter is pending in tribunal. It was listed but not argued. So the same issue can culminate into GST also. And there was a huge demand on all the contract manufacturers. A lot of replies were filed and all. Now, what we see is, what we have ignored is the valuation aspect. Usually when I talk to clients, how do you value these supplies? Are you including molds and dies? Are you including the FOC supplies which you receive from your customer? The general answer is, generally what I get an answer is, why sir, in GST there is no such provision. It is a free supply. It need not be added. It's not so. Actually, it is not so. In fact, in another 10 minutes, I'll explain you. This can be a bigger challenge in GST also. There are certain rulings which has made the matter much more complex. In the past also, there were certain rulings. I'll touch upon that. That's the first area which I'll talk upon it. Second is the canteen services. I think Tushar touched upon whether it is a supply or not. I'll quickly talk about its valuation, not much. Third is the valuation in case of import or service. Now, this is something which usually the practice is, whatever I am going to pay to the supplier outside India, I will pay tax on it. That's the usual practice. Whether it is right, whether it is wrong, we'll touch upon it in a little more detail. Now, before I go into the details, the tax has to be on the transaction value, provided it is a price actually paid or payable. It is for the supply of goods and services, and the buyer and the seller are not related. And the price is a sole consideration of sale. When it says sole consideration, apart from price, the buyer is not supposed to do anything else. He will pay the price, get the services or goods, and get on with it. If he is doing something else, whether that will tantamount to consideration, whether it will become a non-monetary consideration, whether it will become a barter, these are the questions which, at least in pre-GST regime, in sales tax, service tax, excise, we were not too much concerned with barter. In GST, we are. So, as I said, in the past, there were certain disputes. GST, the things are much more complex, but we are ignoring it. And I think it's high time. It's now 6 years plus. We should also concentrate on improving on our tax efficiency so far as these points are concerned. Now, what is condition of a contract vis-a-vis non-monetary consideration? Before I talk about other jurisprudence, just quickly, if you look at, it says when you are not getting everything in terms of money value, what you are not getting in terms of the money value will be added. And what will be added will be the open market value of those supplies. So if you are giving something to your customer, and customer in turn is giving, let's say I'm into construction, he's giving me cement, steel. If the value of the cement and the steel has to be added, then it will be the open market value of the cement and the steel, equivalent to that, whatever is the consideration. So this is how the valuation rule proceeds, but I'll not go into that detail. First, we'll stick to the question whether what he's giving me is a non-monetary consideration or it's a condition of a contract. So I'll quickly come to how internationally it is. So one example which is there in Australian GSTR, just to give you a brief understanding, is there is an engineer. He agrees to do certain work at an agreed rate of $100 per hour for a company called Mountain, right? Under the agreement, that engineer must perform the services at the premises of the company called Mountain. When he is going to go and work there, the premises, the Mountain is supposed to provide him computer facilities, stationery, safety equipments, etc. Apart from that, the company is also supposed to fly him from wherever he is to Melbourne, and also giving him accommodation and meal. The question was whether these active things which the company is going to give is a non-monetary consideration of the engineering service of Eddie, or it is a condition of a contract. So by looking at this example, what Australian GSTR ruling says, what his consideration for service is only $100 per hour. These are all conditions of contract. It is not a payment of anything in addition to $100 to him. Therefore, the same should not be added while paying the tax on the engineering service by Eddie. That's the example which is there in Australian GSTR ruling. I'll quickly turn to how things are getting changed in GST. Pre-GST, there is a tribunal larger bench judgment in the case of Bayana Builders. I think most of you know. Just quickly to tell you what it is. Basically, I was a contractor. During the course of the construction, you were the receiver of the service. You were supposed to provide contractually. The contract was agreed that I will do the construction for you at X amount, provided you will supply me certain items, let's say steel and cement, and that will be used in the construction activity, and I will provide the services back to you. Now, the question was when the contractor is supposed to pay the tax, whether these goods which are provided by the recipient, FOC, to the provider, whether the same has to be added in the taxable of value of the construction service. The court held no, because what he is doing is he's only providing steel and cement. Under the contract, it was a responsibility of the recipient to provide it. And what was agreed between the parties is, I will charge for my consideration, I will do the construction, you will provide me steel and cement, I will use it, and I will construct the building for you. So whatever he is giving me is consumed in the construction activity, but is not meant for me or for my consumption. Therefore, the same should not be added in the taxable value of the contractor. So if I look at Australian GSTR or this judgment, it looks that these items should not be added, while these are more like a condition of a contract. He's supposed to provide it, and therefore I was supposed to consume it and do my activity. But surprisingly, recently this advance ruling came for Karnataka. Now, this is slightly different than the last two examples, but it's very interesting. I think most of you must have gone through it. Those who have not, just for the benefit of that, this has created a different understanding of gifts and the supply. What this advance ruling is talking about is, there is a cement company. Cement company has floated a scheme that for every bag of cement you buy, I will give you 13 rupees as a discount. But that 13 rupees as a discount will be kept in a bucket. You can say in an account. Once there is a sufficient amount collected with the dealer, he can encash that amount or that total discount, which you call it as, against gold or white goods. The question was, when the cement company is giving this gold or white goods, is it a gift? If it is not a gift, can the company take a credit? That was the first question. Second was whether there is a supply by cement company to the dealer, and dealer buying these goods as per the or achievement of the target by the dealer to get this gold or white goods is a supply by the dealer to the cement company, and therefore there is a barter, and therefore it is a, you can say, an inducement or a consideration for getting a gold. Just to repeat, the question was when he is achieving the target, the dealer is achieving the target, he gets certain discounts. Using that discount, he's going to get the gold or the white goods. So whether this achievement of target is a consideration for getting the gold or the white goods. Surprisingly, the Advanced Ruling Authority held that the achievement of the target is the inducement for getting the gold and the white goods. Therefore, there is a supply of gold or the white goods from the cement company to the dealer without realizing that what he is doing is only buying the goods. He's not doing an extra activity. He's not walking an extra mile to get these gold or white goods. It's basically a target or an achievement of purchasing of those goods, more and more purchasing of the goods. So in that way, dealer is only acting as a buyer, not doing an additional activity to get these gold or white goods. Therefore, it cannot be called as an inducement, and therefore it cannot be called as a consideration. But this is what it is. Today, this advanced ruling has created a lot of confusion, because till now the understanding was and to some extent correctly also, the understanding was the gold and the white goods which are given by the company on achievement of the target is nothing but a gift, because it is at as a seller, as a cement company, I have decided to give it to them on achievement of the target, whatever the targets they achieve. So it cannot be, there is no contractual obligation on me to give that gold or white goods. So it cannot be more than a gift. And therefore, people were reversing credit of these gold and white goods when they were achieving the target, etc. But after this judgment, there is, or the advanced ruling, there is a lot of confusion which need to be sorted out. I think like there is a circular for cross charge and ISD. There is definitely a need of a circular, so, or a clarification so far as discount schemes are concerned. Now, coming to other areas where this contractual obligation can be a question could be for the contractual employees. Now, recently what I have viewed is, while I was having discussions with many of the clients and reviewing their contracts with the contractual employees, what I have noticed is generally the understanding is the company will provide meals not only to their own employees, but also to the contract manufacturers' employees. When it comes to recovery of subsidized meal, if I recover 5 rupees per employee for my own labor, for my own employees, I also recover 5 rupees per worker from this contract manufacturer supplier. So the manpower supply, when he raises the invoice of 100, because I have provided meals to him, I raise the invoice of 5. But what I have seen is general tendency is on this 5, I do not pay tax. Because what I feel is this 5 is nothing but a deduction of consideration for the manpower supply done by the manpower supplier from me. So in this transaction, what I have seen, one, people take credit of the meals provided to contractual employees. That's question number one, whether that credit can be availed or not, because strictly speaking, if the same meal which I have given to the contractual employee, if the cost of the meal is, let's say, 10 and I recover 5, on 5 they are not paying tax, they are taking the credit on full 10. That's one thing which they are doing. Another which what they are doing is this 5 rupees they are simply deducting from his invoice and paying him 95, saying that, see, I have not done any supply. What he's done is a supply by the manpower supplier to me. Now, this is something very strange which is happening without realizing there is clearly a 2 independent supplies, one by company A on your screen to company B, the manpower supplier of food. Then there is a supply by company B back to company A of the manpower supply, which is for 100 rupees. That's how it has to be understood. But right now, what people are doing is they are simply taking the invoice of 95, on which 18% GST is charged by the manpower supply. That's something which is happening right now. So far as I think this judgments and advance warning, I will quickly ignore because I'll come to the next topic. In fact, on this canteen thing, I'll like to clarify that if this is happening and only 95% tax is paid on 95, there is a clearly an exposure on company A. Okay, coming to provision of equipment to third party and job worker. Okay, so this is something which I was talking about, that usually the tendency is I give a job to a contract manufacturer to manufacture certain goods. While he's manufacturing the goods, the tendency is I either give molds and dies or I give child parts to them. These mold and dies, all the child parts, are used by him in the manufacturing of the equipment for me. These contract manufacturer could be a P2P transaction or it could be a job work transaction, but these equipments are given FOC by me. The general tendency, without looking into the contract as to whose responsibility it is, what is the understanding between the buyer and the seller in the document, these values are no tax is paid on these values. Recently, in some of the investigations and audit of very, very big corporates, it has been found that the contractual clause were not properly drafted. The responsibility was not very clearly carved out. And there has been a huge demands against the contract manufacturers for this FOC supply, saying that the tax has not been appropriately discharged on these components, plant and machinery, molds and dies. The reference to the circular of mold and dies has been disregarded by the authorities, saying that because the circular talks about a situation where, at least in one case, they said circular talks about a situation where the molds and dies are given and does not cover a child part. That was one of the cases where they said, because these molds and dies are not going to be consumed by him. In your case, it will be a child part which will be consumed by him. That was one of the examples. In another case where these molds and dies were given, they said it is not clearly carved out in your contract whose responsibility it is, how the valuation will be done, who is responsible to arrange the dies or the machines. Since it has not been given clearly, I will assume that it is a responsibility of the contract manufacturer to arrange this molds and dies. Since you have provided, as a buyer, you have provided, it has to be amortized in the value of the goods. So these are the recent some problem areas which has come out. In fact, this is the circular I was talking about. In fact, there are mixed advanced ruling also. When I asked some of my team members to do some research, there is a dual advanced ruling approach. In fact, on the very same concept of where the diesel is supplied by the service recipient free of cost to a fleet or to a GTA service provider, there is one advanced ruling saying that by simply putting some words in the agreement that it is the responsibility of the recipient to provide diesel, you are trying to circumvent the statute, and which is not the intent of the parliament. To that extent, in this Gurujender Singh Sandhu, they have made the observation and the value should be included. In the other advanced ruling, they have clearly went into as to what the contract says between the parties. But despite these advanced ruling, I've seen, if you look at your contracts, in some cases, these mold dies contracts or contract manufacturer contract or a job worker contract are so old that they are since 1996, and we are only changing the date and signing it. Some of them don't even have after 2000. So when I asked for the contracts, I was surprised to see that the same very contract which was there in 2000. Imagine 2000, there was an old excise valuation provision we are talking about. we are still using the same contract and we are trying to defend GST. So there is a need to revisit that. That was the whole idea of talking about it. Now coming to another concept of valuation, which culminates out of contract manufacturing or condition to contract, is the situation is the principal, and this is also very common practice when it comes to job work scenario. The principal supplies raw material to the job worker. The job worker is supposed to do some processing on the raw material. The processing results into certain scrap. The scrap is retained by the job worker. The intermediate goods or the finished goods is sent by the job worker to the principal. Job worker is discharging tax of 18% on the job charges which he is getting. Now, the scrap which is sold by the job worker pays GST on the sale of scrap. Now, what authorities are raising question is, the scrap is coming out of what? Raw material of the principal. Who is the owner of this raw material? Principal. The scrap, then who is the owner of the scrap? Should be principal. Then ideally, who should pay tax on it? Principal. Even if the job worker has paid the tax, first allegation is there is a sale of scrap by principal to the job worker and then job worker to the scrap dealer. So although job worker has paid tax on this scrap, principal should also have paid the tax. That's the first allegation. Second allegation is, what is agreed between principal and the job worker is the job charges. But job worker is also getting consideration from the sale of the scrap. Therefore, what job worker is supposed to pay is GST, not only on the job charges, but also on the consideration which he gets from the sale of the scrap. That is the second allegation. Interestingly, there are some cases which have gone in now even to the level of show cause notice, and we are waiting for an order. Now, if you really look at, in principle, the ownership of the scrap remains with principal. Then how can a job worker sell a scrap without being an owner? So ideally there should be a supply by principal to the job worker for this scrap. Then job worker is also gaining some money from the sale of the scrap. Therefore, ideally job worker should pay job charges, GST, on not only job charges, but also on the consideration of the scrap. But if you look at the jurisprudence on this, I was surprised to see that there is some positive hope in that. In fact, for the past, if something has been done like that, you can clearly use these two. One is Andhra Pradesh High Court, another is, and in fact, both are Andhra Pradesh High Court. One is in the context of sales tax, another is in the context of GST. If you look at the first one, the miller was giving rice for milling, and the millers were getting some broken rice, husk, etc. And they were getting some from this byproduct. They were getting some consideration. In the first case, the question was, when the owner gives this rice to the miller and the scrap is retained by the miller, then whether that sale, whether that consideration which is earned by the miller from the byproduct should be added in the turnover of the petitioner or the seller. It was the question, which court said no, it should not be added. There is no sale of byproducts by the principal to the miller, and merely because these goods are not returned, the same does not lead to any sales tax. Interestingly, using this, again, High Court have given a relief so far as GST is concerned, where they said because both the parties never agreed to assign any value to this consideration, it cannot be treated as culminating from a contract between the principal and a job worker, and therefore the tax should not be paid by the principal on at least the scrap which is generated and retained by the miller. So these are the two judgments which can be used, but definitely these are areas which are prone to dispute. Now, valuation, I think Tushar has touched upon. I'll skip that for the benefit of all, because I talk about another important area. If there is a time permits, subsequently I can come back and explain this. Now, so far as these overseas payments are concerned, generally what happens is, if if I receive certain services from abroad, he will raise an invoice of $100 to me or 100 rupees to me. On that 100, I am supposed to deduct TDS. I do the grossing up, I deduct TDS of 11 rupees and deposit under section 195 to Government of India under income tax. I will pay 100 to him, but I will record my cost for these services as 111. The question is whether I have to pay GST on 100, that is the actual amount which I have paid, or I have to pay GST on 111, that is including the TDS which I have deposited to the Government of India for as a tax on his income in India is the question. Now, if I look at jurisprudence on that, again, there are rulings in the service tax on both sides. Two judgment, which is Louis Berger and Salim Associates, clearly says that the TDS amount which you are paying or which you are paying to the Government of India on the behalf of the foreign supplier should be included in the value of the supply and the tax has to be paid. There are 4, again, tribunal decisions, which says the TDS amount which you have deducted and paid to Government of India, the same should not be added in the value of the goods. Now, if I look into that, since there is case laws on both the sides, one may say that the tax has to be paid in this example on 100 and not on 111. But if you ask me, correctly speaking, the GST should be paid on 111 and not 100. I will give you 2 reasons for that. One is, in GST, the tax has to be paid as per valuation provision, not only on the transaction value, but also on the amount which the buyer pays on behalf of the supplier. This tax, which is deducted and deposited in India by me as a receiver, is actually a tax on his income of the supplier. Therefore, it was his responsibility which I have discharged. Therefore, I should pay. So far as those judgments which I have discussed with you, the judgments which says they are not on TDS, you need not pay service tax. These judgments were issued at the time, which was, if you look at most of these, they were for a period which were prior to 2012. Prior to 2012, in the valuation provisions, it used to say the tax on reverse charge has to be paid on the actual amount charged by the supplier. Now, in this example, what he's actually charging is only 100. Therefore, courts have gone into the valuation rules. I'm not saying that it is correct or incorrect. All I'm saying is those judgments had an additional provision which the court have considered and held that tax is not payable on the TDS amount. So with this, I think Nandaji is here to stop me.
Yes, actually,
I-
is waiting for.
Yeah. I'll just tell. So I think I'll stop here. We can definitely take up the questions if there are at the end of the session.
Thank you, sir. Very valuable suggestion to our participant. Now ask to Pavan or some request to
Hi,
present
Pavan.
his present on a appeal and GST.
So,
Pavan
Nanda ji,
ji,
continuing with the Shivam suggestion, because this is the last session of this year, please
Yes,
send
sir.
a plant at our home.
So I want to introduce to our all the participants. Pavan ji is a chartered accountant, also advocate. He is a partner, senior partner in Athena Law Associates. He is expert in the indirect tax practice since 2010 in this firm. He is currently head of the GST advisory services of the firm. Pavan ji.
Thank you, Nanda ji. Thank you
Thank
for
you,
the
sir. Thank you very much.
Thank
Yes,
you. Thank you for inviting for the session also.
sir.
So, friends, today's topic of mine is with respect to appeals under the GST. So, I will first would like to just simply discuss about what the appellate remedies are available very quickly. So, as we all of know, for a quick revision, that we can, after the receipt of the order under section 73 or 74 or the refund order under section 54 or any other order which the adjudicating authority passes, so we can file the appeal to the Commissioner Appeals. And there are two segments. If the order is passed by the joint commission, by the person above the joint commissioner rank, so appeal can be filed by the additional commissioner or the joint commissioner, so appeal can be filed to the learned commissioner appeals. And if the order is passed lower rank than the joint commissioner, then appeal has to be filed before the JC appeals with a pre-deposit of 10%. And after that, we can go to the tribunal, which is very soon going to be constituted, because the act has also been passed. They will be notified and benches will be constituted. And after the tribunal, we can file the appeal to the High Court or the Supreme Court. So these are the, basically we all know about the appellate remedy which is available with us under the GST law. But when I was preparing for the session, so I was going through the provisions. So I want to discuss certain provisions which are we generally not discuss in any of the forum or in the day-to-day routine. So first of all, when I was going through the provisions of appeal to the Commissioner Appeals, so 2-3 interesting points I have noticed in this. One of that we can file the appeal to Commissioner Appeal against the order of adjudicating authority. So who are the adjudicating authority? It has been defined under the GST law. So I will discuss the exceptions of that. The exception of one of the exception is the revisional authority. So order passed by the revisional authority cannot be challenged before the Commissioner Appeals. So I gone through the provision of the revisional authority. So friends who were practicing or who have cited in the state VAT laws, so there in most of the states there is a provision of revision of the order. But in central law, in central excise or the customs or the service tax law, we are not used to for the revisional orders. But under VAT, there are almost in every state there are provision of revision of orders. So under section 108, they have created one revisional authority, and what power have been given to them? The revisional authority can examine on the request of the commissioner or the CMO2 can examine any proceedings, and if they find that any facts which have not been taken into consideration while doing the proceedings and it is prejudicial to the interest of the revenue, then they can revise the order and by enhancing the demand or modifying the demand or annulling the order of the adjudicating authority. They can revise the order. So what is the impact of that? So friends, today what is happening, especially in the September months, there is a flood of notices to all of us. And because the due date of issuing the show cause notice for the financial year 17-18 in normal cases, there are no fraud and suppression, etc. exist. So the last date of issuing show cause notice is 30th September. So show cause notices are coming with a defective drafting or by conceding half facts and leaving half facts. Or my friends, when our audit of 5 years get audited and we get a closer report, so all of us, like in a service tax regime, we get happy, okay, our audit is closed, some demand is raised, the issue is closed. But my friends, this section 108 says for any proceedings, if any material fact has been left out, they can recall the proceedings, and this 3 year is further available from the order date. So if the order is passed for 17-18 by 31st December by the adjudicating authority, or the audit is closed and the audit report is issued on some particular date, the revisional authority have further 3 years to re-examine this. So this is very interesting, I found during, again, because we are again revising this provision for discussing in this forum. So there is one again option available with the department for the revisional. So what is the conclusion out of it? What we should aware about that whatever facts, whatever documents we are submitting during our audit or during our adjudicating proceedings under section 73 or 74, or whatever documents or details we are submitting during the refund claim, for the refund claim, we should duly get it acknowledged in our letters and get it properly recorded, so that all material facts which we have informed to them should be taken into account. But still, this section is so wide, which says if the material facts which are available either on record or not available on record, if left out for considering, so try that your all submissions on factual aspect are covered while the adjudicating authorities or the audit authorities are concluding their proceedings. So please take care of that. Now coming to the again definition of adjudicating authority. Now the adjudicating authority also excludes CBIC, advanced ruling authorities, tribunal. So, and further, as we discussed in the starting of the this session, that where alternative remedy is not available, we can approach to the high courts. So if we are aggrieved by any decision of the CBIC or the advanced ruling authority, then the alternative remedy which is available under the law is not available under the law. So therefore, we can approach to the high court in that case. And therefore, you must have seen the judgments on the quashing the circulars or quashing the advanced appellate order of appellate advanced ruling authorities. So these are not covered under the definition of adjudicating authority. One of the important aspect I have seen in this this section 107 for the appeal to be filed to the Commissioner Appeals, what it says that we can file the appeal to Commissioner Appeals against the order of against any order or any decision also. So I have analyzed what they mean by order. All of us know that there may be refund order, there may be order under section 73 or 74, but all other decisions which we can challenge. Now I find very interestingly what order decisions we can challenge. So my law, so when in our day-to-day proceeding with the department, what happened, like I will give you 3 examples. In one of my case, what has happened that Commissioner Appeals have given me a favorable order for refund, and department has filed the appeal against that order, and department was not releasing the refund, saying that our since we have filed the appeal before the appellate tribunal, so we will not release your refund. One of the fact is that there are CBIC circular on this aspect that they cannot hold my refund. There is a judgment, Supreme Court judgment, High Court judgment, that the order of the appellate authority has to be duly complied by the adjudicating authority, despite the fact that they have further filed the appeal. So they cannot upheld the refund, but still they upheld the refund. But that was since a service tax matter. Now in GST regime, if that situation happens, so at one stage we can file a writ saying that the court should be directed to the department to release my refund considering the circulars and Supreme Court judgments, or alternatively, against this decision, if I take this decision in writing from the department, against this decision of the department of holding my refund on the ground that they have filed the appeal. So this is one of the decision which they have taken. And section 107 says any decision taken by the adjudicating authority can be challenged to the Commissioner Appeals. So this type of decision can also be challenged. Another example, sometimes in again one of my case, what happened that there are series of tribunal judgment on a particular issue. So my issue is pending before the adjudicating authority, and that issue is after the series of judgment from the tribunal, the department has challenged in the Supreme Court. So what the department has decided to put my matter into the call log book. So what is a call logbook? That once the Supreme Court will decide this issue, then they will adjudicate my show cause notices. But I request the department to adjudicate my show cause notices based on the sested judgment. But they kept my matter to a call logbook and they have given me a writing. So that is one of, again, that is a decision of a adjudicating authority to keep my matter in call logbook. So I can challenge under GST regime, I can also challenge this decision of the adjudicating authority to keep my matter in call logbook before the Learned Commissioner Appeals. Now, recently, what I have seen that in one of my client case, what they have done, they have sent me a ASMT 10 in 2018-19. I have replied. Then they have issued me a DRC 01A in after 2 years. I have replied thereof. No opportunity of hearing given to us. Nothing. And now last month suddenly they have appointed a special auditor under section 66. So this is they have given me a letter. So again, this is a decision of a commissioner to appoint a special auditor in my case. So this is a decision. This is not an order, but this is a decision of the commissioner to appoint special auditor in my case. So therefore, I can challenge this decision of the Commissioner Appeals commissioner to appoint special auditor before the Commissioner Appeals also. So this is very interesting fact which I find that generally what we know from the service tax regime that we can only challenge the order, but in GST regime it is written that any decision can be challenged. So we can challenge it to Commissioner Appeals and thereon we can carry on the same to the tribunal and High Court, etc. Now coming to one more interesting point out of that provision, that some of the orders or the decisions of the adjudicating authority cannot be challenged before the Commissioner Appeals. What are those? That if my file has been transferred from one officer to the another officer. So like in some DGI cases also, my file is transferred from one state to another state. So I cannot challenge it to before the Commissioner Appeals. If order has been given to detain my books of accounts or my records, I cannot challenge that order before the Commissioner Appeals. And if the order is sanctioning the prosecution under this act, I cannot challenge it to the Commissioner Appeals. And there is one provision, section 80, which provides for that I can apply to the commissioner for making installments of my admitted liability under section 80. So if the commissioner denies to give me the installments for discharging my liability in installment, I cannot also challenge that rejection of application to the Commissioner Appeals. So all in all, these 4 cases, I cannot challenge the order of the adjudicating authority before the Commissioner Appeals. So what remedy is now available with me, as we discussed, that if the no alternative remedy is available to us under the statute, we can challenge it before the Honorable High Court under a writ jurisdiction, Article 226. So those orders which cannot be appealable to the Commissioner Appeals can be challenged to this. Now, when I was going through the section 112, which provides for appeal to the commissioner, appeal to the tribunal. So friends, interestingly, what happened in this case, that earlier also commissioner in tribunal, we can file the appeal against the order of the Commissioner Appeals. And earlier also, the Commissioner Appeals and the commissioner are considered to be of similar rank. So the appeal against the order of commissioner or principal commissioner is directly lying with the tribunal. But the current provision of the GST law provides only that I can file the appeal to the tribunal for the order aggrieved under section against the order received under section 107 from the Commissioner Appeals. So the section 1112 is silent on that aspect, that appeal against the order of commissioner or the principal commissioner, which is order in original itself, can be challenged to tribunal. Presently, the provision is silent on this aspect. So the order which will be passed by the commissioner or the commissioner appeals, I cannot file the appeal to the commissioner appeals, and tribunal provision also does not cover. So although later on the government will amend this section because it is, I think, left out provisions from them. But if it is not corrected, then again I can argue before the Honorable High Court that there is no alternative remedy available with me under the statute, and therefore the order passed by the commissioner or the principal commissioner, there is no alternative remedy, and I can file the writ under under Article 226 before the Honorable High Court. Friends, I have seen that some of the companies face issue in doing the pre-deposit, because when we have to file the appeal before the commissioner appeals, there is a 10% pre-deposit. When we have to file the appeal before the tribunal, there is a pre-deposit of 20%. So nowadays there is so many arbitrary demands based on the some differences in the returns, and they simply issue the show cause notices and then passing the order upholding their show cause notices. So there are a lot of demands which they are creating, and unnecessary I am ending up paying 10% pre-deposit. So if some of professionals are advising to go directly to the writ because of this ground of pre-deposit. So friends, I want to draw your attention that in past, I find rarely any judgment of the High Court which has interfered with the provisions of the pre-deposit provided under the statute, unless the statute provides any exceptional circumstances in this case. So the going to the High Court only on the ground of pre-deposit will not workable. Yes, if there is an arbitrariness in passing the order, if there is a violation of principle of natural justice in passing the order, and which ending up resulting in the huge demand, then we can directly go to the High Court. Like we have received a ASMT 10 saying that there is a 10 crore difference between GST 2A and GST 3B. I have replied in DRC 01 ASMT 11, but they have not considered it. They have issued DRC 01A. I have replied, they have not considered the reply, whereas everything is factual. So ultimately, they issued the show cause notice and upheld that show cause notice also. So because they are not listening my facts and keep on going confirming the demand, so there is a violation of principle of natural justice in those cases. Because I end up in paying the huge pre-deposited in this case, so I can challenge this on the ground of principle of natural justice rather than only arguing it on the pre-deposit ground that I have to pay a pre-deposit in this case. So now the question, so many clients now are keen to go directly to the High Court, because nowadays orders are coming in haywire manner. Like I have given you an example that in one of my client case, they have appointed special auditor directly. So client has inquired whether we can go to the High Court or not. So in a very landmark judgment in Radhakrishnan Industries, the Honorable Supreme Court has set out some principles. What they said that this writ petition under Article 226 is a discretionary power of the Honorable High Court. So they can either admit the writ under 226 or not, but they have laid down some principles. They said that the court has to see the alternative remedy available under the law. So if it is that available under the law, they must first resort to that rather than admitting the writ. But they have created an exception for that by relying on the previous High Court judgments. What they said, that there are 4 basic principles which you have to see before entering into the admitting the writ petition on the alternative remedy. If there is an alternative remedy also available, then when the Honorable High Court can accept the writ petition if there is a violation of fundamental right. But parallelly, the Honorable Supreme Court said that we have not to file the writ petition only for fundamental right, but we can file the writ petition for any other reason also. For the other, they said there is a violation of principle of natural justice, then we can file the writ petition. If it is wholly without any jurisdiction, so there is no jurisdiction. So whenever we are litigating, we must also find that order which have been passed by the adjudicating authority, whether they have the jurisdiction or not. So we can challenge that, and there is a violation of legislation of challenge. So as earlier we were discussing in our beginning of session, that we can in many writs they challenge Article 14, Article 19, Article 301, because this is one of the ground of getting admitted our writ. So every time all advocates also take this type of ground. So in these cases we can go for the alternative remedy. But also the court said the remedy, alternative remedy should not only available, but it should be efficacious. So it is very important. Now under the GST, after the order of Commissioner Appeals, we can go to the tribunal. So there is an alternative remedy, but it is not efficacious remedy, because currently tribunal is not set up. From last 6 years, tribunal is not set up. So persons are going directly to the High Court saying that there is no efficacious remedy available, so entertain our writ. So courts have entertained that writ. But after seeing the flood of writs based on the order of Commissioner Appeals, the High Courts have directed the government to fasten the procedure of constitution of tribunal, and in between they have inserted a provision that appeal to tribunal can be filed within a 3 months from the date of order, or within a 3 months from the date when the when the president of the tribunal assumes the office, enters into an office. So currently the appeals of the Commissioner
Well,
Appeals, just a
excuse me.
minute,
Acha,
just
sir,
one minute,
yeah, okay.
completing in 1 minute.
Okay.
So the Commissioner Appeals order can be challenged to tribunal within a 3 months from the date when the president will enters into its office. So we have a sufficient time. We are not required to worry upon the order of Commissioner Appeals, because nowadays high courts are refraining from entertaining much petitions on this ground of tribunal, because tribunal is now going to be constituted, and we have a period of 3 months from the date when it will be constituted and president will presume the office. So with that, I am ending up my this session with one more point very quickly, that as discussed, that the limitation period provided under the law should be adhered, that the file to be filed before the Commissioner Appeals within a 2 months or within a 3 months from the date of the order. But in exceptional circumstances, High Court have given a relief, like in a registration. Court said, Madras High Court said that there is no harm in restoration of registration. So therefore, time limit should not be applied for filing the appeal. And in one of the case, Allahabad High Court has given the relief where the SSC were not able to file the appeal to the Commission Appeal because of the issues on the GST portal. So there are exceptional circumstances if the courts are giving the relaxation on the limitation period. But yes, the limitation period should be taken into care, because there is no discretionary power under the GST law for condonation of delay except the limited period which has been provided under the law. With that, I end up my session. Thank you, Nandaji.
Thank you, sir. Now request to Jogesh ji, Mr. Jogesh Gawar to present on GST credit. Jogesh ji, you are there?
Yes, Nandaji.
Yes. Jogesh will be is a managing partner in government company. He is a chartered accountant by profession. Jogesh is now presenting GST credit, the matter of GST credit. Yes, coming.
Yeah, so basically my presentation contains 2 topics, and in that 2 topics you will see the magnitude of those 2 topics the quantum and the variety which those two topic presents. And there are a lot of other advanced rulings on promotional gifts and all those things. So I'm not picking advanced rulings as such because I personally believe that they are creating havoc and laying down unnecessary, wrong interpretation of laws. So the first thing why I said that advanced ruling should not be considered, because I just want to show you the very first advanced ruling, which is JK Fenner India Limited, Tamil Nadu Advanced Ruling Authority. Now, this ruling is in favor of taxpayer. ITC available on works contract services used for repair and maintenance factory building to the extent it is treated as revenue expenditure as per accounting standards. Now, we all know that under Section 17(5), if you are availing works contract services or any purchasing any goods or services that are being used for construction of immovable property, the ITC is not allowed, and the construction is defined as repair, maintenance, alteration, all these things to the extent of capitalization. Now, the expression capitalization has become a huge interpretational challenge. What is the meaning of to the extent of capitalization? Trust me, DGGI has also started, asking interpretation of the taxpayers. I personally am dealing with one of the show-cause notice and where order has already been passed on the meaning of capitalization. Now, this Tamil Nadu Advanced Ruling Authority said that if you are treating this maintenance repair as revenue expenditure as per accounting standard, the ITC is available. Now, recently we quoted this Tamil Nadu Advanced Ruling Authority decision in Karnataka, GST matter, and this is what the Karnataka authority had to say. It is true that the word capitalization, so there is no client name mentioned, but this is one of the extract of the order which we are under appeal now. It is true that the word capitalization is not defined in Karnataka GST Act, but the word capitalization cannot be assumed to be capitalization in the books of account. Nowhere does the Act states capitalization means capitalization in books of accounts. Here, the Act means to say that capitalization is nothing. See, there, uniqueness, sort of new inventions. So they're saying the Act meant to say that capitalization is nothing but adding or resorting to the value of capital goods. Now, at one place they are saying, nowhere Act says capitalization in books of accounts, but they are saying, Act is saying that it is adding or resorting to the value of capital goods. In fact, Act is not stating this. Another is the eligibility of ITC does not depend on treatment given in the expenditure in the books. The accounting entries may be modified, altered, deleted as per the contingency of the taxpayers. The extent to which capitalize only suggests, now this is very confusing and this is a vague interpretation. The extent to which capitalized only suggests that the extent of such expense are expected to be capitalized or else will be capitalized to such immovable property. Now, this order doesn't make any sense. It is contradictory in itself. And the only thing what we want to show here is that these advanced rulings will not help you in interpretational issue. We have contended on many grounds regarding the para 12 of Ind AS 16 regarding subsequent cost, where it says that for subsequent cost repair maintenance, it is a charge to P, it is charged to P&L, not to be capitalized in immovable property. Then there are Supreme Court decisions on the meaning of the word capitalization. What is the judicial interpretation? What judicial dictionaries are saying? What is the ordinary meaning of capitalization? And given how the GST law is framed, is there any other provision where the word capitalization is used, and how it is interpreted in that provision? So all of these provisions are to be combined and thrown upon the officer to give them a sort of sense that we are not arguing on exemptions that capitalization only means books of account. So these advanced rulings are the advanced rulings just for the sake of a decision and applicable to that particular applicant. However, entire India, the other authorities in entire India is contending on the interpretation of word capitalization. So this was the first I just wanted to discuss on a live issue. Another is the elephant in the room. That is the second topic, and that is, the extended topic. I have not picked any other topic, is the vendor violations. Now, GST authorities will deny ITC even if your supplies are genuine in certain cases. I'm not saying GST authorities are right or wrong. They will deny. First scenario is registration status inactive on GST portal for your supplier, non-reporting invoices on GST portal, non-payment of GST to the government, GST paid but using ineligible or fake ITC, non-issuance of e-invoice, and non-issuance of e-way bill. Now, my topic is judicial pronouncement, and I will only cover that part only. But these are the 6 categories where we are actually dealing with the show cause notices and orders and all those things. Under 3 or 4 categories, the decisions of high courts, various high courts have already come, which I'm going to discuss. For example, non-issuance of e-way bill, ITC is denied. There is no decision yet for high court. Non-issuance of e-invoice, there is no decision by any high court. So, and there are other decisions of Supreme Court and high courts where we can take an inference on how we interpret these, non-compliances at a vendor's end. First one is, obviously, we are going to discuss where the supplier has not paid the GST. There may be different varieties. Supplier has not filed GSTR1. They have not reported your invoice on GSTR1. So we are going to discuss the High Court decisions. First one, there are 3 Madras High Court decisions on this topic. TY Bethel Enterprises. So this was a single bench decision, and this was the very first decision under the GST law. So Madras High Court was dealing with the question whether the authorities should first approach to the supplier or they can directly, proceed against the recipient. So Madras High Court held that we are not able to appreciate the approach of the authorities that they are going directly towards the recipient when it has come out that the seller has collected tax. The omission on the part of seller must have been viewed very seriously and strict action ought to have been initiated against him. So therefore, if you have not initiated any action against the supplier, you should not proceed against the recipient as well. Now, there were allegations on the recipient for fake invoicing and all that. Yes, you can make inquiries and frame other offenses. But when it comes to, non-payment of taxes by the supplier, you should first, you should have initiated proceeding against him. The second decision which came in Madras High Court, this is not the second decision under GST law. For the Madras High Court, we are now dealing. Pinstar Automotive India Private Limited. The High Court held that Section 16 conditions are to be read strictly and cannot be read to jeopardize interest of revenue. The court termed the collection from the recipient as a protective levy. Now see the the innovation of the Council of the Revenue. Council of the Revenue has brought out a new concept of protective levy. It was never discussed under the VAT regime or excise regime or any where before the Madras High Court or any other high court for that matter. So the Council of Revenue said it is a protective levy, and he explained how it is a protective levy, and there is a condition specific to the right of taking ITC, and Madras High Court actually accepted the contention of the Revenue Councils that Section 16 condition is to be read strictly, and this is a protective levy when we are recovering from the recipient. Now, the Madras High Court also held that when you recover it from the supplier, there should be a mechanism to give this money back to the recipient. And I think after this judgment, Section 41 was also amended to that effect. However, because the recipient have paid, reversed the ITC along with interest and penalty, Section 41 does not talk about refund of interest and penalty. So how to go about that if the supplier has paid interest and penalty? So to that extent, there is still a fight, and this High Court does not answer that. Then the third Madras High Court decision is Jai Balaji Papers Con, which is the recent, and it categorically said that ITC is not eligible if supplier has not paid GST to the government. This decision actually is not a well written decision. There are total 7 paragraphs, and the High Court only reproduced the extract of Section 16(2)(c) and said therefore GST ITC is not available to the recipient, without discussing whether it is constitutional, whether the condition is impossible, and all those things. And I'm sure the petitioner counsel must have put forth these contentions. So without considering those contentions, I think this is not a well, in my humble, with due respect to the honorable court, this is not a well written decision as per the writing, decision writing, sort of guidelines laid down by the Supreme Court in number of cases. Now we come to Calcutta High Court, the jurisprudence of Calcutta High Court, Suncraft Energy. ITC cannot be denied to recipient without due investigation of supplier. Now it categorically held that you have to have investigated the supplier first. Otherwise, you won't be able to proceed against the recipient. So there has to be an investigation of the supplier. Without investigating the supplier, just blindly proceeding against the ITC, the recipient, is not acceptable. Again, Calcutta High Court, there are 2 decisions, Cargo Traders and LGW Industries, where the High Court held that mere cancellation of supplier registration from retrospective effect cannot deprive the recipient of the ITC. So this is also one of the disputes going on from a vendor violation perspective, that just because their registration is cancelled, the ITC is not available to the recipient. Now we come to Patna High Court. And these decisions, there are a couple of decisions of Patna High Court which is dangerous. And I am right now sitting in Patna dealing with one of those decisions. I'll discuss that. Asta Enterprises, Patna High Court, said tax discharge to the government is a burden of proof cast on the recipient who claims ITC. This is, they refer to Section 155, which state that the burden of proof that the recipient is eligible to ITC is on the recipient itself. So the Asta Enterprise High Court decision said that the burden of proof is on the recipient, which has created a right and can only be sustained with the fulfillment of the condition. So if tax is not paid by the supplier to the government, ITC cannot be allowed. Next Patna High Court decision is Munna Traders, and this is the most important decision, I believe, in all the decisions, because it has a deep interpretational issue, and I'm dealing with this before the appellate authority appeals here. Now, it says where the excess ITC was claimed, admitted and paid back. So you have claimed the excess ITC and you found out that, okay, I have wrongly availed it or utilized it, and therefore I am reversing it, but without interest. So if you see section number 50, interest is payable when you avail and utilize. Okay. And however, under section 73, they have not amended the expression. The expression still remains availed or utilized. This is first. Second, there is a provision under 73 or 74 for that matter, that if you are paying tax along with interest, there will be no penalty under section 73 and all the proceeding will stop. 74, there is 15% penalty. So under 73, the case I am dealing with, and here also the case was that the supplier, the recipient has reversed the ITC, however, not paid the interest. ITC was utilized. So the recipient did not pay the interest and utilized the ITC wrongly. The question was whether penalty is payable. The High Court said yes, penalty is payable under section 122. Now, because section 73 says that you pay the interest, tax along with interest, then penalty is not payable. However, if you have only paid tax or reversed ITC, you cannot claim the benefit of that provision to say that penalty is not payable. And they have levied the penalty under section 122, which is from a civil liability perspective. I am dealing with a case, they are levying penalty under 73 itself, 10% of tax due. That you have not paid the interest back, therefore penalty is levied under 73(9), and they relied on Munna traders. So first of all, we had to distinguish between 122 penalty and 73(9) penalty. Now, interestingly, 73(9) says 10% penalty on tax due. Now the question is whether tax includes interest or not. Because I have not paid tax, but I have, after 2 months, I realized that I utilized it wrongly and I reversed it. So after 4 years, the department quoted and department saw that you have not paid the interest, but you duly reversed the ITC. And in the audit, they demanded the interest and then issued the show cause notice and order. However, at that point of time, my tax due was 0. So 10% of 0 is 0. Or 10,000, whichever is higher. So 10,000 should be the penalty, not the 10% of tax due. The authority is contending that when it says if you have not paid tax or if you have paid tax along with interest, penalty is not payable. So indirectly, the law is intending that if you have not paid interest, the penalty is still leviable. However, the expression uses tax due. So they are saying even if interest is not paid, then the penalty should be 10% of tax due. So if you have utilized 2 months of for the wrong ITC and your ITC was 10 CR and interest would be like for 2 months would be very small, they will levy a penalty of 1 CR, that is 10% of tax due. This is what they have interpreted. And the same matter we are dealing with Jodhpur division. There is a Madhya Pradesh High Court decision that they said the tax would also cover non-payment of interest. And we said, consider the 10% of interest due. No, they are saying no. For the purpose of non-payment, we are considering tax including interest, but for the purpose of calculation of penalty, we will levy 10% on the tax amount itself. Now, this is a very, very important and is a very deep topic, and I think that this will go to Supreme Court in the interpretation of 10 penalty on 10% of tax due where the interest is not paid. Now, this High Court very, accurately, or I would not say accurately, I would just say that with considering whole picture has levied the penalty under section 122, not 73(9). So therefore, whether 73(9) is applicable, 122 is applicable, or neither is applicable, it has to be seen. Another is the latest decision of DIA agencies. This has come as a relief to the Kerala people. The Kerala High Court said mere non-reflection in GSTR 2A does not disentitle the registered person from claiming ITC if assessee is bona fide and fulfill all the conditions substantiated with evidence. So you must be receiving ad hoc notices saying this is your 2A, this is your 3B minus, this is the difference, or in your GSTR 9 table number 8, 2A minus your 3B plus another 6 months or 12 months, there is a difference and then ITC must be paid. This is how the notices and orders have been issued without identifying the supplier, without identifying the invoices, mere on the assumption that there must be some default in payment of the taxes by the supplier. So you must be having these notices, and I think for Kerala jurisdiction, I think this is a very welcome decision that mere non-reflection in GSTR 2A does not disentitle the recipient. And there are, press release, FAQ also on this specific topic. Another important, I think the most important decision right now for us is Ecom Guild Coffee Trading Private Limited. This has created, I think, a problem for everyone for the past period. And for the fact, more importantly, for the fact that this is by the Honorable Supreme Court. The Honorable Supreme Court said the burden of proof of receipt of goods is on the recipient. And how you prove that you have received the goods? Details of vehicle delivering the goods, payment of freight charges, acknowledgement of delivery, lorry receipts, all these things, payment proof, invoices, agreements. And after considering these documents only, you can prove that you have received the goods. Now, if I have to ask you, or you ask yourself, whether you have these proofs for the year 2017, 18, 18, 19, or 19, 20, can you produce the lorry receipt of all the goods you have received? The vehicle details when e-way bill was not applicable in 17, 18? The answer, most of you will answer no. Or majority of you will answer no, that we do not have lorry receipt, or even if we have, we are such a large organization that it will be in the warehouses, or go downs, where pulling out these records is not possible. And this is now the impact of this decision. I'll give you the live impact. UP show cause notice issued by the UP GST authorities, and this is an order. They have rejected our refund on this ground. So it is not that ITC will be denied. They have rejected the refund. Says the Sarvoch Nyayalaya के decision Ecom Guild Coffee Trading Private Limited के बाद निम्नवत मत व्यक्त किया गया for claiming ITC. Genuineness of transaction and actual physical movement of goods is necessary. So there is a claim of ITC. Genuine actual physical movement of goods are the sine qua non, and aforesaid can be proved only by furnishing the name, address of selling dealer, details of vehicle which has delivered the goods, payment of freight charges, acknowledgement of taking delivery of goods, tax invoices, payment particulars, etc. Since you have not produced these documents, your ITC is ineligible and therefore your refund is ineligible. So do not underestimate Ecom Guild. This is what I'm trying to say. And UP GST officers have already started discussing in their WhatsApp group that ask the compliance of Ecom Guild Coffee Trading Private Limited Supreme Court decision. And every time we are going with the refund, they are asking this. Next is, if I'll take just 2 more minutes.
Please. Yes, Judith. Okay.
So if your supplier ITC is not valid, so your supplier ITC is not valid, then your ITC is not valid. This is the advanced ruling authority which came. Now, I am not sure based on this advanced ruling, actually the provision under section 16.2 said your supplier must pay the tax liability either from cash or utilizing the eligible input tax credit. Now, department is saying if he has utilized the ineligible ITC or fake ITC, then you are not meeting section 2C condition. Now we are contending impossible conditions, that how we trace vendor payment. Now look at this condition. If you are saying that that is impossible to trace that whether vendor has paid the taxes or not, what would you say to this, that how would you ascertain that your suppliers, your vendors, vendor ITC is fake? And the artificial intelligence they have applied. Now I'll show you the extract of the order we are dealing in one of the state. This, you cannot imagine the artificial intelligence they are having. This is the DGGI artificial intelligence. So I have blacked out my name of our client, and you can imagine they have traced out the origin from where the first invoice was issued. So on the right upper side, it's Gava and Company logo. We are not involved in the transaction on just a funny side, but you can imagine the artificial intelligence they are implying. And this is not available with the taxpayers. So either the government should make it available to us so that we can also, deal with the vendors accordingly. And this is the extract of the order, which I am presenting to you, the live order by one of the authorities. Way forward, you should know your vendor. There has to be a periodic review using automation, tightening of contractual terms, credit term 45 days for risky vendors. I'm not sure how you are managing the MSMEs, but there is a loophole of 45 days. I'm telling you in the MSME Act itself that you have to pay within 45 days. But there is still something you can do to avoid the limit of that 45 days under the MSME Act. So you have to be very careful to that limit if your defaulters are MSMEs, because you have to pay them. Declaration from vendor and maintaining proper documentation. These are for the future way forward. What is for the past transactions? So you have to analyze what is your actual case, whether it is for cancellation of registration for the vendor retrospective, whether it is fake ITC, whether two-way issue, non-matching, whether it is actual non-payment of taxes by the supplier. So there are different High Court decisions on different perspective. So do not assume that if you have Patna High Court decision or Madras High Court decision against in one of the case, Madras High Court decision will apply to other case as well. So therefore, just take every situation in a different way and have arguments differently to the different situations. Thank you very much.
Thank you, sir. Thank you very much. Now request Chair Sri Bimal Jan sir taking the question and answer session.
Yeah, good evening to all the participants and all the learned speakers who have joined today for latest legal jurisprudence in GST. So we are already, sort of time, but let me take few questions which is being posted in question answers tab. First question to Pavanji. Pavanji, you talked about some, order for the audit under section 66, whether this is the appealable order, can be appealed before the appeal authority. This question is being asked by Rajesh Kumar Khurana.
So I was discussing the facts as well as the legal provision that the section 107 says we can challenge any decision of the adjudicating authority before the commissioner appeals. So when our jurisdictional authority is appointing a special auditor without any valid reason, so that we can challenge. But as you are asking that section 65 we can challenge, to me I think section 65 will not be a challengeable. But since section 66 order is an exceptional and they have appointed a special auditor without any valid reason, to me this is a decision of appointing an auditor, special auditor, and we can challenge this.
Okay, all right. So we got only two speakers, you and Yogesh ji. So I'm just passing next question to Yogesh ji. Yogesh ji, if you can just throw some light, because Shivam has left. So
Sure.
you can take this question of Mr. Sandeep Bansal. In case of secondment, there are lot of dispute which is going on.
The slip
And
is
he's
also
asking-
available, sir. The slip is also available. Lipika
Lipika
Rastogi
is
from
available.
Nitya. Yeah.
Not an issue. Not an issue.
Okay, sir.
Okay. So you can read this question which is given by Mr. Sandeep Bansal, that there are retrials paid by foreign company in home country and recovered from the host country. Also, their salary paid by Indian company locally to employee. Now, based on Supreme Court ruling in the case of Northern Operating, secondment is treated as manpower supply. Then on what value GST will be charged? Only what is paid to foreign company, or salaries will also become part of value of manpower supply?
Yeah. So, Sandeepji, so there is a provision under valuation rule. Section 15(1) talks about the transaction value, which is the price actually paid or payable for the supply. So your transaction value will be the actual amount of manpower supply. However, the issue comes under section 15(2), where it says any cost incurred for providing, the supply is to be added back to the taxable value, whatever you are considering under section 15(1). So that is a provision which creates a problem. However, to the exception to that provision, if that cost is incurred as a pure agent, then that is to be excluded. Then there is another aspect of non-chargeability. So there is a principle that if you cannot do something directly, you cannot do that indirectly. So if you cannot levy GST on fuel, on salary, on electricity, on other components directly, then you cannot and you should not add the value of those diesel, electricity, or I'm just talking electricity from a pure agent perspective. So let's say diesel. So if you cannot charge GST on diesel directly, you cannot charge GST on diesel indirectly. So on that principle, one can assume that salary portion should also not become the part of the valuation. However, department may come to you taking the shelter of section 15(2) to say that any cost incurred for providing supply shall also be added back, and therefore salary shall also be added back to the transaction value of that manpower supply.
Okay. Next question by Mr. Deep Jyoti Majumdar. It is related to one of the judgment which I cited. H 1.5 times restriction in refund of ITC also applicable to other than inverted duty structure. To my mind, this amended rule 89 sub rule 4 clause C, though prospective, but to my mind, it is not applicable because there's no such condition in the act itself. Whether you look at section 16 of IGST Act or read with section 2 subsection 5 of IGST Act, and then section 54 subsection 3 of CGST Act. Under section 54 subsection 3, only two conditions are being stated that should not be subjected to export duty, and exporters should not have claimed drawback. So this condition which is being given under rule 89 sub rule 4 clause C is ultra vires, and that is what Karnataka High Court judgment, and that will prevail because there is no other contrary judgment, and that is being considered by Honorable Delhi High Court as well. Coming back to the next question, someone Lipika is there from Nitya? Not there. Okay, so Pavanji, to you. Can I claim ITC if not reflecting in 2B, but we have paid the amount? That's what he is talking about.
As on date.
As on date, not possible?
Not possible.
Okay, not possible. Very straightforward answer by Pavanji, not possible. So Deep Jyoti again, no. Let me take another participant's query to Yogeshji. Gyan Sagar, we have received bill from Japan for Japanese salary. So in that case, GST will be applicable or not? If applicable, so input is available or not? So two questions back to back.
Yeah. So first of all, you're again talking about the northern operating applicability. So the Supreme Court decision is a factual decision. So whether the Japanese salary you're paying comes under the purview of the facts discussed by the Supreme Court, I think we'll have to study in detail. But I think ITC is available as long as it is being used for business purpose, and there is no denial under section 17(5) or under other rules that there is any reversal of ITC or blockage of ITC. So if you're ITC, you can claim and utilize. It's better to pay GST. If you cannot claim or if you cannot utilize, then you should analyze the facts whether it is matching with the law laid down by the Honorable Supreme Court.
Okay, Pavanji, next question by Mr. Ashok Jha. Under what circumstances we can apply to Commissioner for payment of GST in installment?
There is a provision under section 80 which provides that we can apply for the admitted liability in installments. So there are no circumstances. If you are not able to discharge, you just show your reasonable basis to them, and they will entertain your application. If they reject your application, then you cannot file the appeal to the Commission appeal. But yes, you can go to the High Court. In a genuine cases, you can go. There is no criteria specified in that. Under what circumstances we can go for.
Okay, so last question to to Yogesh ji, and last question to you. So Yogesh ji, last question for you, which is by again Deep Jyoti. If dues from foreign debtor is adjusted from dues payable to it as creditor, does it satisfy the test of being termed as export of services? Means this adjustment can be considered as a payment received.
So yeah, so basically there are two different transactions because one is you must have supplied something, or you have taken, let's say, loan, and for that you have to make any payment, or you have received any services, for that you have to make payment. So those two transactions are separate. Now let's say I assume that you, on one hand you are supplying the services, on other hand you have to make payment for some receipt of services. For that receipt of services that is considered important, you must be paying GST. And for that supply of services, why should not it be treated as export just because the debit and credit entries are adjusting? Okay, so in my personal view, yes, it would be treated as receipt of foreign currency exchange, the adjustment entry as well. And so therefore, it should be treated as export of services.
Last question, Pavanji, to you. Yeah, you want to say something?
One addition into this, that there is a judgment, I am not remembering the
That's
name. Law says that judgment says that government wants foreign currency to come into India. And if some foreign currency has to go outside India, so since we are adjusting it, so foreign currency not going outside India means that foreign currency came into it. So that they have considered this view also. So that's the reason.
Okay, Pavanji, last question to you by Mr. Bankat Ramanan. 1 month, there is no sale, only credit notes. The client filed it with GSTR1 that month, and next month there is no sales. Can we adjust that credit in the following month?
Yes, I think there is a circular, direct circular on this.
So you say it is possible, right?
Yes, I think there is a 27/20.
But only challenge for those taxpayers is that GSTR3B is not accepting negative
figures. Yes, sir. So there is a circular which says whenever you have a positive turnover, you can adjust in that month.
But more worry and more fire to it that what happened if there's a higher value and you continue to have it for a longer period. And these are the challenges practically in the market, not an issue.
Yes, practical challenge will come that artificial intelligence will reflect my GST and they will do direct search. That yes.
So thank you very much, Pavanji and Yogesh ji. In absence, Shivam ji and Lipika was there from Nitya, and Tushar was there from Tadvatam. To all the participants, you have taken out your time. I know that we are in festival mood also, Ganesh Chaturthi in Maharashtra. So wishing each one of you the happy Ganesh Chaturthi, and God bless all of us together. You're taking out your time and watch this webinar on latest legal jurisprudence. We tried our best to give insight what all judgment are coming on different topic of GST. GST is happening. A lot of things are happening, plus, minus, positive and negative. We have to find ways and means to read positive side and negative side. And then only we can conclude where we are heading for. But it is very important. We must know both sides of it. What is in favor, what is in against. And that is how we can take correct decision and calculated decision that would be way forward for all of us together. Lot of things in GST, IDT committee or PSD will continue to have these kind of webinar and seminar. Of course, physical seminar are very, very interesting and good and important. But this month we were occupied, our auditorium was not available. That's the reason we could not do seminar in Delhi. But definitely in the month of October, we are looking for national conference. So get set ready to join national conference in the month of October. With this, Let me say thanks once again, wishing each one of you the festival season. Paryushan is also going on for Jain community. So Paryushan is over for another, part of Jain community. And there we say forgiveness, Miksami Dugdam. So by open heart, by words, deed, action, if we have done anything wrong, knowingly or unknowingly, forgive us, and look forward to see each one of you in our upcoming program, either webinar or seminar. And thanking all the speakers for making splendid and excellent presentation. Compliment to you and to my secretariat, PSD, Nandaji, who has done hard work and made this possible. Thank you to each one of you. Take care of yourself. Thank you very much.
Thank you, sir.
Thank you, sir. Thank you. Thank you, Nandaji.
Thank you, sir.
Nandaji,
Thank you all. Thank you all.